my dear members. I welcome you all for the one-day training program for peer reviewers. So for this, we have a very distinguished speakers, CA Mohan Lavi sir, Abdul Majid and Aditya Bajaj. I request CA Kavita Parmesh to escort the speaker, CA Mohan Lavi sir, onto the dais. And welcome him with the book. I request CA Kavita Parmesh, Bengaluru branch chairperson, to give the welcome address for today's gathering.
Thank you, Shripal, and good morning, everyone. A warm welcome to this one-day seminar on peer review training for peer reviewers. I also welcome Mohan Lavi sir for accepting our invitation and being here, and always being supportive for any thoughts we go back and to him. Peer review is an important aspect as of now when it comes to quality of audit. It is from both the practitioner's perspective and the reviewer's perspective. So therefore it is an important subject for all of us to know, understand the nuances of what it involves and how the firms have to be prepared, at the same time how the reviewer will have to approach the reviews when they take up. I also believe that this is an important area of revenue as far as people who want to take it easy in terms of practice also, because the number of firms which have to be reviewed, peer reviewed, is increasing day by day with the increase in the number of partnership and the changes which ICAI is bringing out in terms of peer review requirements. So therefore it is the numbers are increasing and we need more quality peer reviewers. So therefore it's a good revenue earning vertical too. So I would request each one of you to take advantage of this, learn, and we have the experts in the field who have the experience of making things possible for people, and make the most out of this. Thank you and have a good learning today.
Thank you, Kavita. So it is my pleasure to introduce the speaker for the session, CA Mohan Lavi sir. He is a seasoned chartered accountant with over 30 years of professional experience spanning senior roles in industry as well as public practice. He is currently partner at KP Rao & Co Chartered Accountants, where he leads the firm's IndAS and GST practices. Mr. Mohan Lavi sir began his career in industry after qualifying as a CA in 1989, accumulating experience in finance across manufacturing and software industries. He has subsequently transitioned to advisory and public practice with more than 8 years in practice. He specializes in global accounting standards including IndAS, IFRS, US GAAP and GST. He is an established author of several books on accounting, including titles on IFRS, IndAS, key audit matters and SOX, many of which are published by leading publishers such as Wiley and Bharat Law House. Mr. Lavi contributes regularly to publications like Hindu Business Line, Deccan Herald and the BCIAS Journal as well, sharing insights on financial reporting, audit and GST. He is a faculty member with ICAI for the IndAS and Registered Value Certification courses as well. He is recognized as a speaker at industry conferences in India and abroad as well, covering topics such as accounting standards, IFRS, SOX and GST. He has added several credentials by completing certified online courses in leadership with artificial intelligence from the Indian School of Business. He has also broad language proficiencies and maintains professional relationships throughout the accounting and regulatory community. So with this brief introduction, I present before you today's speaker, CA Mohan Lavi sir. As a sign of any auspicious program, it is our culture to light the lamp. So I request the dignitaries on the dais as well as our Vice Chairperson, CA Virupaksha Yanthupal, to come up to the dais and join us for the lighting of the lamp. I request the members continue to raise for the I Say Motto song.
यैषस्सुप्तेषु जागृति यैषस्सुप्तेषु जागृति कामं 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 कामपुरुषो पुरुषो निर्विमानः निर्विमानः तदेव शुक्लं तद्ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः अस्मिन् दोषः शतः सर्वे तदूना चर्यतश्च नान्यमीतश्च एतद्वैता 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 एतद्वैता
Yes, we'll be starting off with the first technical session by CA Mohan sir. The first topic will be the rationale and significance of peer review, review procedures and reporting by peer reviewer and importance of AQMM in peer review. So the session, then we are going to have a break from 11:45 to 12, and then we'll continue with the Mohan sir session. So where he is going to talk about compliance with technical and professional standards and compliance with framework on quality control general and specific controls. Over to you, sir.
And first of all, we thank Bangalore branch for calling me here for this one-day program on peer review and talking about generally the importance of peer review, requirement of peer review, and few of the control aspects of peer review. As Kavita was saying, I think the importance of a peer review in today's environment, and I'm going to emphasize this word again, in today's environment, cannot be underestimated because of the fact that if you look at what is happening in the regulatory environment over the last, let us say 10 years, around 10 years, I don't want to take any specific names, no specific firms. The requirement seems to be that audit quality generally has to be improved. And this is a theme which is going to probably dominate for the next few years also possibly. Right? So it doesn't matter who the regulators, it could be SEBI, it could be NFRA, it could be anybody for that matter. It could be our own institute for that matter also. Right? Look at FRRB comments. There also you have a similar situation wherein there's a definite requirement for an improvement in audit quality. And one of the mechanisms for which audit quality can be improved is the system of peer review. That also I think is something which has stood the test of time. Peer review has been there for a very, very long time. It's basically a mechanism established by the ICA a very long back. But I think the relevance, importance, and also probably the method of doing the peer review today will have to undergo a small change considering the background, considering the circumstances in which we are in today. So I'll be talking basically about what is the requirement of a peer review, significance of a peer review, what are the review procedures, and I'll also spend some time on this concept of AQMM, which is there but it is not there, in the sense that it is there but at the same time it is subject to a lot of changes and all those things, and then of course later on we'll be talking about technical and professional standards. Okay, the first thing which we should probably definitely remember is that, and many of you all, I'm sure that all of you all will be registering as peer reviewers, already registered as peer reviewers, some are probably renewing their membership of peer review and all those things. This was started by the Institute 24 years back. The concept of peer review was started 24 years back. It has grown gradually. It has grown very, very gradually along with the requirement for an increase in number of peer reviewers as well as practice units under peer review. It has grown very, very gradually. And one of the things which is very clear is that this is only an inspection. I mean, we can call it as an inspection, a peer review is an inspection, but we should not call it as a fault finding mission. I think one of the things which earlier peer reviews were doing the audit themselves. They were doing the re-audit of the audit, right? I think that is not what is the expectation of the peer review. It seems to be only a suggestive mechanism wherein you can tell that if you focus on this broad concept of audit quality and how the practice unit can improve the audit quality, I think most of the requirements of peer review will probably be met. And again, if you look at the peer review which has been done by by the institute over the last so many years, there have been a couple of changes which they have also come out with different frameworks of the peer review. Institute has always been trying to say that we should increase the population of practice units who are actually going to subject to a peer review. The number of practice units means the CA firms, who will be subject to a peer review. We want to increase that number gradually over a period of time. The idea seems to be that a good population of practice units should probably be covered under this peer review mechanism. So they started off by saying that, if you've got a paid up capital of not less than ₹500 crores, listed companies, if you are the auditor of those listed companies, they were what we call as phase 2. Phase 1 was the listed companies, of course. Phase 3 also they spoke about some loans and advances. But I think what is most important for all of us to know is phase 4. This is a very important phase. Right now, it has been deferred till 31st December 2026. This covers practice units who are 80%, okay, 80% of the practice units, 3 or more partners, or who are also branch bank auditors, not central statutory auditors, branch bank auditors. There was a lot of pushback on this. Many people said, I am getting only one branch audit per year, why do you want to pay a review for this? I am not getting branch audit at all after the new mechanism of branch audit has come, why do you want to pay a review for this? So this is right now being pushed up to 31st of December. Maximum you can expect an extension up to 31st of March 2027, not beyond it. I don't think the institute will go beyond that. They really want to cover this. As Kavita was saying, the population of practice units is going to increase when this kicks in, stage 4 kicks in. On the other hand, and just to keep you all informed, there seems to be a thought process going on that if the turnover is less than 250 crores or net worth is 250 crores, audit should not be there at all. This is what the company law committee seems to be suggesting there. If your net worth is below 250 crores, which was the original idea given by NAFRA, saying that if it is below 250 crores, no need for audit at all. You can do whatever you want. I don't think in the Indian ecosystem that's a good idea. In the Indian ecosystem, that might not be a good idea. People say, in Europe, there's no companies, only listed companies are under audit. In USA, no companies are under audit at all in which ways. So a lot of these arguments are going on, but I think this will take time for us to probably implement in India. The 250 crore net worth criteria is a very large criteria to actually, meet. So I think this may meet some pushback from the institute itself. You may see that this stage 4 companies, maximum in my opinion 31st March 2027, after that there will be no sort of relaxation, which means that from 1/4/27, even for your bank audits after that next year, you may have to get a peer review done, or you may have to do a peer review. As the case may be, if you are a peer reviewer, you may have to get a peer review, or you may have to go for a peer review. Very interestingly, another fact which the ICA has not published, but which is a fact. You look at the FRRB reports which have come out, and there are a lot of FRRB reports. They seem to be having data which suggests that it is the smaller firms which need more requirement of audit quality improvement. not the big firms. The smaller firms and medium firms need a requirement of improvement in audit quality. This seems to be the data. I don't know the exact data points they've got, but I mean, it was just a suggestion which was given there. So I think what we need to do is, right now you may probably get stage 3 units for peer review. You may get. Having said that, I should also tell you that Institute has never prevented a voluntary peer review. They have never said no to a voluntary peer review. Say for example, by any chance you get an audit of a listed company. You are proposing to get an audit of a listed company. Next year there is going to be a lot of rotation of auditors. In case you get audit of a listed company, or you are planning to get an audit of a listed company, you may want to get a peer review done this year itself. So that by next year, it's a mandate requirement wherein definitely you require a peer review certificate even before you are appointed as auditor. One of the first requirement is, do you have a valid peer review certificate from the ICA? So I think it makes sense to, depending on the need, whether you want to go for a voluntary peer review or whether you want to wait for stage 3, stage 4 to set in. That depends on the individual practice unit, but I have seen many CA firms voluntarily going for a peer review despite the fact that they don't have a listed company audit. They just want to ensure that whatever suggestions, improvements in their processes can be done. So voluntarily they want for a peer review, so that also is possible. So I just thought I should put this out in front of you. So SEBI and CNDG mandates making peer review business is necessity for a listed company. There's a very interesting statistic, unfortunately it is not very clear here in this thing, which is given by the peer review board, which talks about the number of peer reviewers per region. Number of peer reviewers per region. And very surprisingly, the Central India region leads the number of peer reviewers. It is neither north, nor south, nor west. Central India region leads in the number of peer reviewers. What could be the reason for this?
They can cover all the areas.
Sir?
They can cover all the areas.
They can cover
All the areas.
all the areas, okay. They can cover all the areas, okay, but it's quite, I thought it should either be west or south or north, but this is as of February, I don't think it's going to change as on date also. Central India comprising Nagpur, Bhopal, all those areas seem to be having the maximum number of peer reviews.
Opportunities. All business opportunities.
Business opportunities.
Should be there from them.
Sir?
Listed company auditors are contributed there.
Not really, not really. I have a very different reason for this. I think they have no other work apart from doing peer review.
Maybe one of the reasons.
That could be one of the reasons. Because I don't see why they should have so many peer reviewers, and look at the numbers. South is only 16%, they are 34%. So maybe they are spending a lot of time only doing peer reviews. But having said that, I should also tell you all that there is a definite requirement for the increase in number of peer reviewers in the south, which is why all of you are here. Right? So I think that number will probably change the next time we go around for a peer review, this statistics there. The requirement of, I think the another reason of course what I felt was that the stage 2, stage 3 practice units probably located in that central area also. So that's why I think maybe they also have a lot of peer reviewers there also, right? If you look at the number of peer reviews certificates issued by the ICA, it was obviously the largest last year. 4,105 peer review certificates have been issued last year by the peer review board. This year it is obviously going to touch, this data is only up to February. In 2-3 months you have 600 certificates issued, so you can expect that even in 2026 you will probably get around the same number, if not a larger number of peer review certificates issued. This is quite a large number, still not sufficient though. This is quite a large number. 4,000 certificates in a year is not something we should take, very easily. But at the same time, I think this shows that the number of practice units who are actually going in for a peer review has actually increased over a period of time. So I think this is a good sign. Obviously, this number is going to increase further in the future also. And we also need to be very careful about the fact that when we go forward, number of practice units increase, population increases, number of peer reviewers also increases. The peer review board has also given a lot of data on what are the most important comments made by peer reviewers to practice units. And I want you all to spend some time on this slide because all of you all will be doing peer reviews in the future. You look at this slide, it brings out a very, very important fact. The largest number of comments have been on auditing standards. If you look at it, I think probably more than 50%. You look at the pie chart here, it's probably more than 50%. More than 50% comments made by peer reviewers to practice units are only on auditing standards. What is the reason for this? What could be the reason for this?
Not serious.
Documentation.
Not seriously followed. The seriousness of this, see, okay, let me be honest here.
Document is relied on juniors.
Sir?
Documents what are watched by juniors.
Documents read by juniors, that also I'll agree. If you look at the Companies Act, it has one single sentence. Every auditor should follow the auditing standards. That's all. Till NAFRA came into the picture, the importance was not there at all. Nobody even thought about it. I am sure that all of you all have gone to the Institute's website. You all have gone to resources. You all have gone to that portion called as Engagement and Quality Control Standards. You all have seen it and you all have left it. I don't think any of you would have downloaded any of those standards, auditing standards. Because let us be honest here, for a very long time, any chartered accountant in India, including myself, thought that as long as I follow SA 230, I am happy. SA 230 is documentation. As long as I follow SA 230, I am happy. I will keep my documents for 5 years, I can prove my documentation, whatever it may be. As long as we are following this SA 230, we are happy. Are you going to look at all the remaining 45 auditing standards and see if it is applicable? May not be. Which is why the maximum number of comments have come on auditing standards. But again, if you go back to the importance of those auditing standards, you can definitely relate to the audit which has been done, or either by the practice units, or even if you want to look at your own firm, what is the importance of auditing standards? You take a very simple standard like going concern. You take a very simple standard like going concern. Do we read the auditing standard to see going concern? Actually, we don't. There are only two possibilities in India, going concern, gone concern. There is nothing called maybe going concern. There is no concept of maybe going concern. The requirement of the auditing standard says that if you feel the entity is not a going concern, you will have to call it out in your SA 705 report or SA 700 report, as the case may be. This is what the requirement is. How do you assess the concept of going concern? In fact, one of the comments I read on the peer review documentation was that net worth has been eroded, therefore may not be a going concern. That may not be the only criteria. Net worth being eroded may not be the only criteria, there could be other criteria also. You look at a concept like sampling, look at concept of materiality, and look at this concept of related party. Everything has been captured in these auditing standards. Therefore, there is no doubt that these auditing standards are probably the most important missed out item. As he was rightly saying, we all go by checklist approach. We all go by checklist and probably given to some article clerk who's seeing the checklist. Article clerk will ask a question, sir, what is your concept of materiality? Everybody. Checklist by itself is not very bad. Checklist is very, very good. But what is important in a checklist is to read that checklist and see the appropriateness for that audit. A lot of these checklists today, which we all know what we are going to do. We take the previous year's checklist and change the year and put this current year's checklist, which is very common. But is it appropriate for this current year? In fact, even Regulatory requirements are also having a problem in the checklist. You take, for example, just to give you an example of why a checklist should be appropriate. You take a cargo checklist, which is given to an article clerk. What is the first question right in the cargo checklist? Does the company have fixed assets register? Because that is the first point in the checklist. So article clerk will go and ask the CFO, do you have a fixed assets register? He will show some very complicated Excel sheet with different colors. 3 colors will be there, lot of details will be there, asset number, all that will be there. She is very, very impressed. She says, okay, FIR is there, no problem. Second question is, have the fixed assets been physically verified during the year? There also similar process happens. One more this thing is there. He says over a period of 3 years, all fixed assets are verified. This year we verified laptops. All laptops are in order, no problem. Only one laptop is missing, that will give the auditor. So second question also answered. Then they go on to title deeds of property and all those things. One important point missing in the checklist which I want all of you all to add is that where any of these fixed assets tested for impairment. Because impairment comes from your standards or accounting standards, it is not there in this checklist because it's related to your fixed assets only. You have to ask the question where any of these fixed assets tested for impairment during the year. Today it is not there in the checklist. Because it is not there, it will not be asked. Because it is not asked, it will not be answered also. So it is possible that an important concept like impairment may just pass away only because it is not there in your CARO checklist or even for that matter in your any other checklist. So definitely please focus on auditing standards. Checklist relevant is there, many of the checklists may not be applicable. Still, let them have the checklist and say why it is not applicable, right? But if you look at all the 46 auditing standards, most of it will be applicable because sampling, materiality, going concern concept, related party transactions, your documentation, 230 on documentation, audit risk assessment, all of these things become very, very important for us. So, auditing standards, very important. Checklist has to be updated. Many people feel that, as I told you, documentation is the most important thing. There's no doubt I say 230 is a very important thing. But regulators nowadays are going overboard on these auditing standards. And absolutely requiring documentation for everything. 2 years back, there was an inspection of an Indian accounting firm by the Public Company Accounting Standard Board in the US. Because they were the auditors of the Indian subsidiary of a US district company, it was mandatory for them to get a PCOB inspection. This company was based in Pune. It was a medical transcription company, I believe. And the auditor also was based in Pune. The company had a very simple profit and loss account. 12 transfer pricing invoices per year. One every month. 12 transfer pricing invoices per year. 10 employees or 20 employees who are paid salary every month. No purchases because it's a medical transcription company. One bank account and some office expenses. That's all it was. The PCOB people came and asked for the documentation. So what the partner did, this is also a pretty large firm. He gave one audit file which had all 12 transfer pricing invoices, full year's bank account, expenses every year, ledger account of expenses, and he said, this is my audit file. Please go. It was a very small company, But this is the Public Company Accounting Oversight Board, which is in the US. So they asked, where is your audit plan? The auditor said, what you are saying is my audit plan. 100% vouching, 100% bank verification, 100% payroll is there, everything 100%. This is my audit plan. They said, no. Where is your documented audit plan? I don't see it on the file. As per SA 230, you are supposed to have audit plan on the file. I don't see that on the file. Then this partner said, okay, I'll probably prepare one and keep it for you, no problem. Next question asked by these people was, where is your risk of material misstatement document? I don't see it here. Partner said, 5 crores turnover company, 20 employees, 1 bank account, 10 transactions per month, 120 per year. No misstatement at all, no risk at all. They said nothing doing. You should document this. So the Public Company Accounting Oversight Board gave a comment saying that the company needs, the practice unit needs to improve its documentation principles. You should have one document says this is my audit plan. Have one document which says that this is my risk of material, all as per your auditing standards. Prepare one checklist document, keep it, regulators also will be very, very happy. Sometimes they may go a little bit overboard, but still overemphasize the importance of documentation. Apart from all of these things, I don't think we need to worry about other aspects. Only thing is, Schedule 3 there have been 24 comments. Caro very few comments, others could be small things. Council guidelines 14 comments. Accounting standards are even about 16 comments here. So most of the practice units have got comments across all of these things. Schedule 3, again we are all exposed to Schedule 3 now. So I don't expect that there should be a negative comment on Schedule 3. See, advisory is not a comment. Advisory is it has gone to the peer review board and given an advisory saying, please change your practices. It is one step beyond the suggestion stage, which means that the report has been given by the peer reviewer, it has gone to the peer review board, the peer review board has felt that there is a problem here and they have told the practitioner that your Schedule 3 compliance is not correct, please improve it. These things are very clear here, but obviously the focus is obviously on auditing standards, but please be a little bit careful about this because whenever you are going for this practice unit for the peer review, it is important for you all to see what exactly they have followed in terms of this auditing standards and other aspects also, right? Okay. It is quality improvement, it is not a fault finding approach. I have already mentioned this, so don't go with an impression of fault finding. Because if you want to find a fault, you can find a lot of faults. In a very, what you should say, practical manner, you should say that DAFRA is actually a fault finding body, initially. They were a fault finding body. They found mistakes in documentation of so many auditors because their objective was to find faults. Your peer review says is not supposed to be like that. I still remember this, one of the partners in the large accounting firm told me this. There was an inspection done in which the regulator had asked for, please give your time sheet, listed company audit, please give your time sheet as to how much of time you as a partner have spent on that audit. And these large accounting firms have got massive amount of, they use software for everything. So he was able to give a lot of details about each day, how much he has spent on audit, including what areas he covered. All that was given to him. And they found that on the audit committee meeting day, he had written only 45 minutes. Only 45 minutes spent on audit on the audit committee meeting day. What is the job of the regulator? To find a fault. So they asked him, why have you spent 45 minutes only on the date of audit committee? Remaining days you spent 3, 4, 5 hours. On this date, why you spent only 45 minutes? His response was very practical. He said, see, audit committee meeting only have to go for the meeting. Audit is already over. Everything has been closed. Documentation has been closed the previous day. That's why previous day I spent 5 hours on the audit. Audit committee meeting day I only spent 45 minutes to review the total report and go for the audit committee meeting. Therefore, I spent only 45 minutes. It was a very practical response given by him. You are the regulator. What will you say? Your job is fault finding. He has spent 45 minutes in audit committee meeting. What will be your response? They said nothing doing. Please spend more time on audit in the audit committee meeting day. suggestion given. He said, okay, fine, no problem, I'll spend more time. How much time did he not ask?
So let us sit there.
Sit there and fill in your time sheet, doesn't really matter, right? So please don't go with an impression of fault finding. That will become a problem there. Because if you look at fault finding, you will find many situations wherein you actually go and find a fault. At the cost of repetition, I should tell you this very important thing, though it was not in our, we had a peer review done, and the peer reviewer normally, we know in advance which files he has to take. So what do?
Prepare that first.
Perfectly. We prepare those files, already you would have heard this in Hubli Mohan. So we prepare those files perfectly. Not, okay, we leave out a few things because let him find some mistake also. That we do little strategically. Let him find some mistake, one paper will try, something will keep it off. But when he came for the peer review, he took one file which was not at all there in the syllabus.
Out of it.
Out of syllabus. He took that and said, Mohan sir, I want to do this also because I have to cover more population as per the peer review guidelines. Can you give me this file also? This happened at some 3:45 in the afternoon. So I told the people, okay, please give him that file. So he came back at some 6 o'clock and said, I'm leaving for the day today, I'll come tomorrow, but I have one small suggestion on this file, which you have given me. We didn't have time to prep obviously for this file. So I asked him, what is the suggestion? He said, see, if I look at the file, there are 8 trial balances. I want to know which is the...
Latest, final.
Okay, latest was the problem. Which is the final trial balance? So I said, really? He said, yeah, I found only 8 trial balances. So please remove all the 7 trial balances which are not thing and please put one trial balance which is the final trial balance. I said, okay, I do it, no problem. So I told the article clerk, you please ensure that you would remove whatever is not required and put the final trial balance. What was her response? We don't know which is the final trial balance. Which is very practical. Okay. So I said, you check with your financials. She said, no sir, I've got an easier thing. I will ask the company. Let them send the final trial balance. I said, they may not have the final trial balance. Audit entries you are passing, no. How will they have the final trial balance? So she said, okay, fine, I will do something about it, no problem at all. And then I said, please ensure that the file is given today because tomorrow morning he'll come back again. So 8:45, 9 o'clock in the night, she messaged me saying that final trial balance received, revenue figure not matching. So it was a problem we had to solve, right? So yeah, we got around that somehow and we sort of, built up the documentation, gave it to him and all those things. His suggestion was very practical. He said, don't load your file with trial balances. All your working papers, put it separately. Give me one file of whoever comes, keep one file, which what we call as final audit file. We call it as final audit file, which contains your trial balance, final trial balance, whatever observations made in the audit, all those things. Please keep only that. Don't keep all of these things. So, what happens is that if you go with an intention of suggestion, it is fine. If I had not told you this, you would have reported to peer review board saying, audit file has got 9 trial balances, documentation improper. You may have got an advisory also for all we know, right? So please ensure that it is more like a suggestive mode, like they said, corrective measures. What are the corrective measures you should take? That's what is very, very important. Okay. What should you all do? Quality of reporting, systems and procedures, AQM, I'll be speaking about that. Training program for our staff, that also is a part of AQM now. Look at the compliance with council directions on fees, number of audits and registers. I am going to leave the fees aside from this discussion because Institute has given a recommended scale of fees, recommended in capital letters, because none of us can actually follow it. It is there, but you can always go and tell the client that recommended scale of fees is 10x, I am doing only 2x. So therefore, I am much better off, I am still this thing here. So don't worry about the fees because the fees aspect is not something which is important right now. But the code of ethics, the revised code of ethics also says the same thing that You should not quote a fees which is so low that you are not able to do the audit as per the quality standards or technical and professional standards. So we just leave it at that only. All of you all will obviously be going for the examination. This is a few things on the final test. This is an MCQ based examination, as all of you all know. This is 90 minutes, 50 marks only is required, completely, and no negative marking, which is a very good thing.
Sample paper.
Sample paper is not test. One of the members asked the peer review board, 20 years I've been in practice. You are doing this online test, peer review board. 90 minutes they were saying, MCQ based. I'll finish in 10 minutes. Can I come out in 10 minutes? They said, no, minimum 60 minutes you should sit there.
You cannot submit it.
You cannot submit it till 1 hour is there. So, even there is a quality involved. Even if you have answered all the questions in 10 minutes time,
So you have to review again and again.
you will have to review, or I don't think you can change your answers to it because it's MCQ based. So, we have a very simple math for this. You are supposed to get 50 marks, correct? And it is about, say, 50 questions, which basically means you, on an average, you can say 1 mark per question. Only for the passing exam, I'm saying. You have to spend 60 minutes. How much of time you should spend on a question? Exactly 1 minute. Don't spend more than 1 minute on a question. Sometimes, of course, you may want to spend more time also, because sometimes the MCQ questions can be very, very tricky in the institute also. They will give you 2 wrong answers, definitely. They will give you 2 possible right answers. Your problem always is between A and D, which are possible right answers. What do you do there in that? That's why you are doing this program, to know what is the right answer between this A and D there, right? So I'm sure that all of you all will pass. There is no problem as far as pass percentage is concerned. It is not like CA final exam, not like SFM paper and all. So don't worry about all of those aspects. I'm sure that I always tell this, that to pass the exam, what should you all do? To pass the exam and get 50 marks, what should you all do?
Take breaks.
Very good. 99% of your problem is solved by going for the exam. Just showing up for the exam, 99% of your problem is solved. Don't worry about these MCQs. No, we are all masters in that, so no problem as far as that is concerned, right? Okay, who can be peer reviewers? We know this program, you have to attend a program here. So there should be a validity for 3 years for your total peer review this thing here. Disqualified if any disciplinary proceedings pending or found guilty of professional misconduct. You obviously cannot be a peer reviewer if you got it. Now there are situations wherein we have had inquiries from the DC of the institute. Inquiries means we have found that you have signed 2 balance sheets for the same company. So we want to institute proceedings against you. It's only an inquiry. Please remember that only if there is an order, only if there is a DC order against you, you will be disqualified. As far as an inquiry is concerned, as long as you respond to the inquiry and the proceedings are going on, you don't have to actually suffer a disqualification, because you will have to worry about only if it's a this thing, right? So, what are the quality failures? A few things which are there. Formal audit planning, I already told you about. No engagement letters issued across all the units. This was flagged as a major problem. Working papers consistently missing the going concern evaluation. I spoke to you a little bit about the going concept or going concern. You just have to worry about the fact that because it's a part of your main audit report, has the auditor tested for going concern? That's all you need to know. Whether it is a going concern or not, those are all decisions which are based on facts, circumstances, all those things. Yeah. Does the audit have a document which says that there is a possibility that this could be a going concern, or do you feel that this company can probably, or whatever assessment has been made, there's a possibility of it not being a going concern? Either ways, a formal document which is required, which says that these are the tests carried out for a possibility of a going concern or no absence of a going concern comes. Please remember that this has to be on every audit file every year. Going concern audit report is issued every year, which means that 31st March every year, this assessment has to be documented, has to be a part of the audit file. Whether assessment has been done, whatever be the parameters, you should ensure that this assessment has been done. So these have been, flagged as serious audit offences. The reason why this formal audit planning also has been flagged by the ICA as a major problem is because we all know this from experience that each audit has got its own set of risks, and those risks are not the same across years, right? They could have changed because of so many situations. Geopolitical situation can be there, the Indian economic situation can be a problem. The risks of each audit will probably change every year. So does your audit plan, or whatever you call as risk of material misstatement, does it cover this particular risk aspect also? So I think that is something which is very, very important. See, this engagement letter also, it is suddenly coming into importance now because we always felt that we can always get this from the client later on. It's only a document, he'll always sign it, there is no problem. First let me finish the audit, first let me get my audit fees, then I will do all the remaining stuff of getting all the documentation, engagement letter, MRL, all those things. But you all will be very, very surprised if you send them the engagement letter after the audit has been done and the fees has been paid, he will ask you a lot of questions. Why are you putting this clause in the engagement letter? We did not speak about this clause in the course of audit. Why is it coming suddenly now? So please remember that engagement letter, even though it may be predated, has to be obtained during the course of audit. Not even before, sir, during the course of audit. Before though you will not get it definitely. During the course of audit, sometime, please ensure this is done. It could be a repetition of your MRL, it doesn't really matter. It could be a repetition of your MRL, but still you have to ensure that this is given in this thing here, right? If you do not comply with the advisory, your peer review certificate can be revoked there. There have only been 2 instances from 2002 wherein the PRC has been revoked for 2 audit firms, one in Delhi, one in Bombay, or because it was a complete violation of whatever advisory was given. So only 2 circumstances wherein they have given this revocation order. Apart from that, nothing has been this thing here. Invariably, what we have seen is that if an advisory is given to your firm, based on your peer review certificate, it all depends upon the response of the firm. The response of the firm will decide whether peer review board is actually going to debar you or whatever it is. In many circumstances, you will have to actually respond saying that how you have rectified that particular advisory immediately or with effect from which date with documented proof. With documented proof, you will have to give it as a response. In most of the cases, the advisory will be dropped. There is no problem. In case it's an advisory also, you will probably say that, okay, we have taken this into account, we will probably rectify this in the next cycle of peer review. So I think that is also very important. So Kavita was talking about the fact that this is an opportunity for all of you all to earn some fees also. What is the fees for peer review? So I think, again, this is not very clear here. I am looking at, if you go to 5 crores and up to 10 crores, practice units with turnover of 5 crores up to 10 crores, which I think in Bangalore you will find about 10 or 20 firms in that particular range. The fees is 1 lakh of rupees, which is good or bad?
Not so lucrative.
Not so lucrative. Okay. Not so lucrative. They give you some 10,000 rupees for AQM also separately. For AQM they give some 10,000 rupees separately. That's 10% of total audit fees, I think. But I'm not going to comment on the appropriateness of this particular fee, but all I can say is that it definitely needs rethinking. The fees definitely needs rethinking because It's not about time spent and all those things. And I'm not worried about the amount of time spent by you or whoever is going for the peer review. I think we should look at this from what is the value addition you are giving for the practice unit. I think that is where the question of fees probably becomes very, very important.
Next 3 years future earnings.
Next 3 years,
Future earnings.
future earnings. So let us say that you do about 2 peer reviews on an average in a year. I'm just giving this as a ballpark figure, 2 or 3 maximum, right? If you have a fee of say about 1.5 or 2 lakhs of rupees, it makes it 6 lakhs of rupees. That seems just adequate, not even appropriate. It just seems adequate. If I were the peer review board, and the suggestion has already been given to them, I would suggest that please go by what they have suggested to the practice unit. Don't go by days spent, time spent. Go by suggestions, because the peer reviewer is spending time saying that these are all your improvements in quality. Give them a fee based on that, right? Now they will come back saying that, no, how can I say that? Suppose there are only one suggestion given, how much should be the fee and all this. I said, all that we can work out. All that we can work out. It's like internal report, high risk, low risk, medium risk, right? If it is high risk, you obviously have to pay them more because they've identified a high risk in the particular audit. But I think gradually this should change. I don't think we should go by a fixed fee here. We should go by what suggestion has been made by the peer review board. Not that this has been not tried before. One peer reviewer in Bombay, he did a lot of actually good work. He spent almost 15 days on the audit, gave out 18 suggestions. 18 suggestions saying that various aspects, auditing standards, accounting standards, it was an Ind AS client, so Ind AS standards, Companies Act. It was a very thorough, this thing here. I think the fee for that was 1.5 lakhs. He wrote to the peer review board saying that so much of work I have done, I know it is 1.5 lakhs, but you should probably increase the fee. You should pay me more fees. Unfortunately, ICA does not have a mechanism of going by request like this. So say, no, thank you very much, very good work done, but it will be 1.5 lakhs only. Right, so I think you should probably wait for the ICA to change this particular scheme here, but I mean, we should say that it is good.
Maybe top up then you should do.
Sir?
Top up. Based on the risk.
Top up. That's what I'm saying. So go with the quality here.
Let it be the fixed fees. If he finds more issues.
More issues, that also is a good suggestion. Have a floor of 1.5 lakhs for everything, and then the more suggestions you can actually have more. It's a good suggestion. But I think all this we should probably write to them and tell them this, because see what happens in this fixed fee concept is that the peer reviewer actually, if you look at his documentation, is more than the practice unit's documentation. If you look at your documentation, it's very intense. You will get scared seeing the amount of documentation you have to do. Sometimes you feel whether it's worth it for 1,50,000 rupees also. That's the amount of documentation you have to do, because the peer review board has got their own systems to look at documentation done by the peer reviewer. Forget about the practice unit. So I think there should be a suggestion for that. You can probably look at this from all of these things here, right?
Sir, in the practice unit can pay voluntarily extra.
Voluntary, they will never.
It will become professional standard. Don't even try that. But I think the best way to handle this would be that the more number of representations go to the institute. I think this is something which all of you should also try, because see, as I said, it's not a question of time spent, number of hours spent, 15 days, 20 days. They're talking about 20 working days here. So 20 working days for a professional chartered accountant, depending on seniority, is quite some time. It's quite some time. So I mean, that is something we'll have to probably look at. So we'll have to see how this will pan out in the institute. But I think you please send your suggestions. Okay. So what else you have to look at? I'll come to the controls aspect later on. The threat categories in an audit. I think this is something which we all know from the Code of Ethics 2019 and now 2026 also. The number of threats have remained the same, 5 only. Self-interested, self-review threat, advocacy threat, familiarity threat, intimidation threat. A lot of these threats we all are very much aware of. See, one of the things which we should know is that among all of these threats, probably the most, what should I say, not valid threat, the threat which is very important for all of us to look at, the threat of familiarity. threat of familiarity because you've been the auditor of a private limited company for the last 8 years, let us say. It is not under rotation. 8 years you've been the auditor. You feel you know the client very well. The client feels he knows you very, very well, right? It's mutual, obviously. Threat of familiarity. It says that suppose there is a problem, I can always go and tell the client. Client says that suppose there is a problem, I can always rely on auditor because he's the auditor for the last 8 years. So we can always, discuss and settle it and all those things. So this is what is the general feeling. But when the problem comes, you will find that this threat becomes even more imminent. If the problem comes, there is a situation where you have to qualify the audit report. Why qualify? I won't even go to the extent of qualifying. I'll go to emphasis of matter only. I'll go to EOM. There's an EOM you have to make. You tell him that there's an EOM, you have disclosed the financial statements, I have to report this as an EOM because it's a requirement as per institute auditing standards. What do the clients say? 8 years you've been an auditor, no EOM. Now you want to put EOM. 2 more years then rotation is coming. All these things you try to say. At that time what happens? This threat of familiarity becomes very, very important. He always feels that he knows the auditor so well that he can probably get away with not having a EOM also. This is where I think this concept of independence, all those factors come into play. Concept of independence, are you being independent of the audit, all of those factors come into play only in this one thing because of threat of familiarity, right? So we have to be very careful that we all know this for a fact. Every audit has got its own set of risks. I have told this before, I am repeating it again. Every audit will have its risks. There will have to be a give and take. We need not mince words about this, we have to be very practical about it. Every audit will have to have a system of give and take. Normally it is give only from the side of the auditor, not take. However, we should remember that the threat of independence, threat of familiarity says that in every audit, just as there are a number of risks, there is also a borderline you should not cross. There is also a line you should not cross, which means that if the violation, so to speak, is so large that it has to be reported for, no option but to report it, you will have to ensure the reporting habits. The practitioner will have to report it. This is where the threat of independence or familiarity becomes very, very important for us to decide. Needless to say that there can be repercussions. There can be repercussions, right? There can be repercussions in the sense that the client may not like it, he may push back and say that no, this is what is happening, or all of these things can happen. But we need to be very clear here saying that the reason why I had to push it into an EOM is because of these factors, right? Either you rectify your financial statements or it will be an EOM. That line should not be crossed without it. I think that becomes a very important, fact that we should also look at it. Self-review threat also becomes a very important factor. What is self-review threat? You have or you do not have much of experience in, let us say, one particular area, let us say valuation. You do not have much experience in valuation because you are not a registered valuer, you are depending on outside people for the valuation report, whatever it may be. The company in the course of the audit has done a lot of valuations of financial instruments, very complicated instruments now. You may not have enough of experience in that. Impact could be material on the financial statements. The self-interest threat is saying that don't review your own audit papers. If you have a problem there, please get an expert to see what has happened, even in the accounting aspect. You can ask somebody whether this is actually correct or not. It could be valuation, it could be min-days, it could be any area. It could be derivative transactions. Many of these transactions, you remember, are very, very, complex nowadays. So whether it is correct or not, you may want to don't review your own work. Don't review your own work is a very important thing. Many a time we will just pass off saying that, I'll give you a very good example. Every one of us during the course of our audits has received an actual evaluation report? Yes or no? Actual evaluation report. Received. Correct?
Graduate leave encashment.
Sir?
Graduate leave encashment.
Graduate evaluation. Received. Very good. Have you all read the actual evaluation report? Read. Okay, very good. Received, read. Both passed. Have you understood it? Understood. Okay, very good. He is saying understood it. Some people are saying not understood it. The actual evaluation report, though we speak about it from the point of view of disclosure only, it says that this much should go to other comprehensive income. This is your provision for gratuity. This is your actual gains and losses which go to your P&L account. We are assuming that actually knows his job, which is nothing wrong in that, because you can't be a qualified actuary because it requires a qualification to become a qualified actuary, right? Nothing wrong with that. But as an auditor, it becomes very important to see whether the assumptions made by the actuary are okay or not. Please remember that the entire actual report is based on assumptions. Attrition rate, discounting rate, increment rate, everything is assumption. The actual valuer is not doing any magic. If there is a change in discounting rate, it can affect your provision materially. Materially can affect your provision for gratuity. So as an auditor, you will have to understand. So you are depending on the actual evaluation report. Therefore, there is no self-interest threat there. But in case you have not able to understand the actual evaluation report, you may have to seek out help and ask them that, okay, is this actual evaluation report correct, appropriate? All of those things should have to be understood very, very clearly. So you have to see that these things are very important. Okay. This is the procedure. You all will go for the practice unit. In 20 days, you will give your report. It is a preliminary report, it is not a final report. The practice unit will come and say that, sir, please drop 5 points. I'll give you my SQC 1. I'll give you all my documentation. I'll give you I'll give you 1 trial balance. Please drop all these points. Only on that basis, we will have to go to final report to the board. I want you all to just think for a moment, saying that you all have pointed out 10 different requirements of areas for improvement. Let us have 2 are high risk or high importance. The remaining, let us say 8 are not of very, very big, great importance here. The practice unit will come and tell you definitely that 100% I've got SQC1 document now, I'll give it to you, don't worry about it. Please drop this comment. This is where, as a peer reviewer, your independence also comes into play. We should not look at, I know that person very, very well, he has looked after me very well in 20 days or 4 days I've gone to the office. You should not look at that. If you feel that the suggestion is very, very critical, or if you feel that the comment which you have made is extremely critical, the practice unit has not followed this at all. In that particular case, you should say that I will report this, you will get an advisory, please respond the same thing to the advisory. It may not lead to your debarment or your PU certificate, your certificate being cancelled and all those things, but I am giving this in best interest of the firm, either rectified during the course of peer review. If it has not been done, in that particular case, you will get an advisory from the peer review board. You respond to the advisory in all, most of the cases, the peer review board will say that this is not a major thing, you have taken steps to rectify it, there is absolutely no problem. I'll just give you one example for this. Last year, one practice unit in Nashik was going a peer review, was under peer review. Actually this company had to go under Ind AS. So they presented their financial statements under Ind AS, format, Schedule 3, Division 2, all that they did. But in the course of audit working papers, the peer reviewer found that all the checklists seemed to be leaning towards AS only. They did not have an Ind AS checklist. They seemed to be leaning towards Ind AS and accounting standards, and they did not have the normal checklist which is there for your Ind AS checklist, so to speak. So when the question was asked, the practice unit said that, no, this is just a mistake, don't worry, we've got a separate checklist, maybe the wrong file has been given to you. But some of the peer reviewers of the opinion that a lot of work has been done, but it can't be done in India's overnight. So whatever they come and show to us is going to be only an India's checklist, but with the same figures, obviously. So he asked the partner, don't feel bad about this. Have you actually done India's audit? I can't get more plainer than this. And to be honest, the partner also seemed to be saying that, no, sir, no, we don't have much of knowledge in India's here, so I think the checklist was only AS only. We're not going to do this thing here. The peer reviewer had a big dilemma here. What is to be done? This is a serious offense. Audit has been done as per AS. Financial statements presented as per Ind AS. So when he called me, I told him that you may have to report this because suppose it comes out from SEBI, even the peer reviewer will be held responsible. Suppose SEBI notices this and says that you have not done as per AS, somewhere they would have put some AS report and all those things. So I told him, please check what are the Ind AS differences they have done. Are there any major differences? Because everything can change in Ind AS. Thankfully, there were only minor changes in Ind AS. The impact was not so large. But the company had presented as per Ind AS, but the differences are not so large. So he gave a report to the peer review board saying that this is what the practice unit has done. The documentation seems to be as per AS, but the financial statements as per Ind AS. Financial statements as per Ind AS seem to be appropriate. Whatever presentation, classification, this is done, all that is okay. Now you please tell me what the peer review board would have responded to this. What should be the response of the peer review board? Any idea? Should we debar the firm? Should we give advisory? Give advisory?
Because it's not material variation, no?
It is, see, India's differences you leave it for a moment. But the fact that you use a wrong set of accounting framework itself is a material thing, right? So the peer review board, in all their wisdom, decided to give an advisory saying that this is a serious offense. They also mentioned that as of now, these advisories are not being published on the website. For whatever reasons, they are not published on the website. You should please take corrective action because at some time in future, this can also go on the website. This can also go on the peer review website. In that case, it becomes a problem because then you will have to have your firm name will be in the public domain. You will see all these things happening and all those things. And of course, the firm subsequently also rectified their, they said, okay, fine, we'll do as per Ind AS and all those things. The beauty in all these things was that in the financial statements, one particular schedule was as per AS. Financial instruments, one particular column was as per AS. The line item was not there in Ind AS at all. I think it is ready to maturity or something of that sort, which is not, it's only in the AS thing. And this thankfully has not been picked up by anybody till now. The firm itself observed it and said that even the company has made a mistake now because they presented this as per one particular item, financial instruments as per AS. Which is why I was saying that if in case any of these things are difficult to understand, you will have to fall back upon any expert opinion to see what actually happens there. So this becomes very, very critical for us to understand. Okay. 11:45 break on? 11:30 na? Kelvin answer correct? ಇಲ್ಲ ಒಳ್ಳೆ ನೋಡ್ತಾ ಇದ್ದೀರಾ 11:45 Okay. It's important to have breaks also, especially for peer review conference. This concept of AQMM was just a sort of a value addition to the peer review concept also. And please remember that institute has always been talking about audit quality in some form or other. They said, okay, let us do one thing. I'll give one audit quality maturity model, which is a self-scoring model where every auditing firm can self-score themselves as to what is their audit quality maturity. Very, very interesting concept brought out by the ICA. Advantage is no examination. Advantages, self-scoring mechanism. Advantages, all questions familiar to all of us. No out of syllabus questions. In the sense that if you know the question, you know what is to be done. I'll give you an example. Does the firm have audit planning checklist? Oh, no, sorry, even before I go to that. First question itself. Does the firm have vision statement? 2 marks. Does the firm have vision statement? Yen martira neevu? If you, yes and no, what is your vision statement? That's not better. So what you will say? 2 marks I will miss if I say no. So what will you do? All the 40, 50 of you will go to ChatGPT and say that, please give me a mission statement from my firm. You will not be surprised if 40 CA firms in Bangalore have got the same mission statement. Because I don't want to lose out on those 2 marks. So what will happen in this AQMM is that if there is a question for which you have to create something, you will do it. There is no two ways about it. You will definitely do it. But then you will also have to look at this from a very holistic perspective to see that what the institute is trying to say is that if you look at all those questions as suggestions more than as questions, automatically your audit quality will improve. You look at each one of those questions as suggestions more than as a question which you have to answer in your firm, automatically your audit quality will improve. So what they have done here is that higher audit quality, they have got a lot of materials for this AQMM. They've got a toolkit, they've got utility and all those things. In fact, what I have also done is I have prepared one Excel sheet for all those questions. I will ask the branch to share it with all of you. You can go through it. It's a ready-made this thing. I have not put the score that you have to put. So it's got an Excel sheet with the basic marks.
It was already sent.
Already sent,
I shared it.
Already received it, okay. Very good. So you can use that as a basis. So you will see here that practice management assurance has got 370 marks. Human resource management in a CA firm has got 150 marks. Digital competency has got 80 marks. Total is 600 marks. There is no passing percentage here. It only depends on what is your score. It depends on what is your score, right? And they've also got a minimum eligibility. They are saying that you are supposed to get 30% only in each of the categories. Absolutely no problem. Mission statement 2 marks already, 28% already, 2% already received. So you will have to be clear about what are these areas for you to do this. And I think you all should be a little bit practical in your self-assessment. We have a tendency to put maximum marks. So I think you all should be a little bit more practical and say that, okay, SQC1 for example, 6-7 months I think. So SQC1 has got 7 months in total here. Does the firm have an SQC, documented SQC1, which has been reviewed by the partner? One partner prepares, one more partner reviews it. You know that equal partner firm. How do you do that? If you can create one SQC1 and put 7 marks. No problem. Tell the other partner, I want 7 marks. I think that becomes a problem. I think what you should do is try to be a little bit more practical in your evaluation of these questions. Look at them as suggestions. All I'm going to say is look at them as suggestions. One firm in Bangalore decided that for all questions they put only 50% marks. They said, I'm not perfect, I have chance for improvement, I want you to look at the question for everything and put 50% only. Because I know that there are always going to be areas for improvement, but let's not worry about all those aspects and all. Let's only worry about how practically you can get those questions here. For example, you look at the ascertainment of the level, right? You will find that there are 4 things here. I will go to the last one which is 85%, it says that the firm has made significant adoption of standards and procedures, but institute is not happy then also. You should still optimize their saying. You want 85%. Still they say try for 100%. That's the last level. The first level is firm is very nascent, will have to take immediate steps to upgrade its competency or will be left lagging behind. Indicates the firm has made some progress, will have to fine tune further to reach the next level of competency. Level 3 is substantial progress, will have to fine tune further to reach the higher. So institute is not happy in any which ways. Each level has got its own problems. One question which all should try is, which level do you all want to be in? Or, as peer reviewers, please remember that you will have to give the score to the firm. Right? They will score themselves highest marks. They will do highest marks. It is bound on the peer reviewer to go and look at this from a very practical angle. I will give you all one example for this. Each of these areas, one question. Here we can have all these documents also. Already been circulated is what they are saying, which is very, very good. Digital competency. Does the firm have official email ID? One question. They cannot create this when the peer reviewer goes. If they are using the Gmail ID even today, they will not get any marks. If they are using a Gmail ID even today, they will not get any marks. Plain and clear, it has to be 0 only. 0 versus 2, yes or no, black and white situation, right? All the remaining things will have to, there will be some amount of documentation which is there, some which is not there, some improvement will have to happen. Those things you all will have to assess as a peer review and see what competency they have got. Please remember this is only a model. The advantage of a model is there is always scope for improvement. There is always scope for improvement in a model, right? Does the firm have its own email ID? Very, very important for you to look at whether they are using their own email ID or not. Have they done one recently? ICA.org also may not be their own email ID. It's an ICA email ID. When the AQMM is talking about having a own email, it means in the firm name, not an ICA.org. ICA is a generic ID. So these problems can come up when you are doing the assessment of AQMM. What are you going to do for that particular thing? But in my personal opinion, one of the areas where the biggest challenges will be there is going to be the second part, 150 marks for human resource management. Human resource management in a CA firm, which depends 98% on article clerks. How does that work? You can understand what the ICA wants to do. They want to corporatize the CA practice also by saying human resource management. Some of the questions here will be very difficult to answer. Does the firm have remuneration practices as per market practices? Yeah, market we don't know. One more important question given here is, do the firm's resources, including partners, have adequate rest between audits? Where? Now season is starting now. Problem is that. Where is the question of rest? No question of rest at all. But I think one of the main areas where the firms can score here, and which again all of you will have to insist as peer reviewers, is there is one question on training mechanism for the article clerks. The human resources, all the other questions can possibly be negative. You can say 0 marks, 1 mark, 2 mark, 5 marks, whatever it may be. But I think as peer reviewers, all of you all should focus on whether the firm has got an adequate training mechanism for its article clerks. When the dependence of the firm is on article clerks, who are anyways not coming nowadays, if they come also, quality is not very good. Now we have the tour mechanism, they have somehow found a way to take leave in the steward thing also. So whatever it may be, if your dependence is high, the only way audit quality can improve is if you have got a proper training mechanism. Please remember that the training mechanism is not only for meeting the requirements of AQMM. This is fine. You will have Saturday training sessions, all of those things will have. I think the importance of training session also stems from the fact that do they understand the new regulations, new laws, whatever is going to happen. They may not. They may require to be told about this. This is where I think you should focus maximum attention in your peer review. In case the firm does not have a formal training mechanism, they also actually talk about having a register for training, what topics have been covered, are the topics wide enough for the scope of the firm, the audits they are doing, is that wide enough? All of these factors are there. I should also tell all of you all that most of the firms have some sort of a training mechanism today. They've got some sort of a training mechanism, but whether it is formalized or not is a very important question for us to answer. That is your job as a peer reviewer. Please ask them to document it. Please ask them to formulate a proper training plan. They should have a plan for this. When are they going to do these training sessions? What are the sessions going to concentrate on? Who is going to do it? May not, again, the firm may not have the necessary resources to do this training program. Are they getting somebody from outside? But what is very important for us to understand is the fact that you will have to ensure that as a peer reviewer, if your ultimate goal is giving a comment on the audit quality of the firm, this is a non-negotiable thing. If it is not there, you should tell them you should please do it immediately or whatever it may be. They will have some sort of an informal training program. I think what the ICA's AQM is expecting is you please formalize it properly and ensure that it is a documented training program. Coverage should be wide, coverage should be adequate, coverage should be completely in tune with what the firm is doing. That is very, very important. We all know this for a fact that I always keep telling this to all my people also. Whenever you ask them a question, they feel that Google or ChatGPT is the answer. This has become an increasingly, worrying trend now. Nobody reads the Companies Act. Nobody reads the accounting standard. Not many people read the Indies in any case, right? Many people seem to be thinking that Google or ChatGPT is the answer. I am not saying ChatGPT is wrong. I am not saying Google also can be wrong. That is, it depends on how you search, what question you ask, all of those things here. But I think to get a conceptual understanding of the law itself, you can't depend on AI or search engines. To get a conceptual understanding of the concept, you have to look at the particular standard itself. I'll give you one small, very, very small example. We are doing an audit now, subsidiary of a listed company. And 4 days back, I called the team and told them that please ensure that Companies Act Schedule 3 has been completely met. Please ensure that all these mistakes are not there. Auditing standards, whatever it may be. And once you've done your full set of financials, you please send it to me. They said, okay, fine. Yesterday, I think, or day before yesterday, something, they sent one final, sir, final financials have been sent for your review. I said, okay, very good. I assuming that they would have taken care of everything. You will not believe 25 mistakes I have noticed in that file. 25 mistakes. Spending 1 hour yesterday, 25 mistakes, including a simple concept like, India's transition notes are there still. 2007 or some 2020, whenever they transition. All those notes are still there, continuing still there. Accounting policies, copied from Infosys. Very clear, I can make out copy from Infosys. I said, at least change the company, I told you. And at least know which company you are doing. Same business, at least I understand. At least change the company to be the relevant, business of the company. So what happens then is that the firm and the partners will start getting a doubt. What else could be missed out? At this level, if this mistake has happened, going into the financials, what could be done? There could be multiple problems there. So therefore, I am re-emphasizing this. Whichever place you will go for the peer review, please focus on this training mechanism. If it is not there, you will have to say it is not there. There is no two ways about it. You have to say it is not there because that is very, very clear, right? Okay. So we will have to look at what are the transitional provisions. Anyway, it is applicable for listed company. banks other than cooperative banks, they will, that AQM 2.0 is the version going on right now. But I think, just like I said that you could have a possibility of having a self peer review done, even if you are not, even if the audit unit, practice unit is not in your AQM requirement. As I said, please think of this as a suggestion. Go through the suggestions, you will find that definite improvement in audit quality is possible. Ultimately, when your firm comes up for a peer review, you will have enough of experience, so to speak, in ensuring that this improvement in audit quality is definitely there. You don't have to worry about this thing there. So, it makes a lot of sense to go through this, go through the AQMM, start your self-scoring mechanism and try to say that wherever it is possible to improve, implement those procedures, implement those practices. Because if you, for a minute, just go back here, most of the focus of this has been on practice management. 370 marks, which is almost about, a major portion is only on practice management. Practice management talks about all what we've been speaking now. Auditing standards, compliance, checklist, SQC1, audit quality, documentation, all of those factors are there as a part of practice management. Rotation of the audit partner if it is required. Do you have independence confirmation? Engagement letter is there. A lot of it focuses on documentation. So what happens is that if you are going for a peer review and you look at this particular aspect, audit assurance or practice management assurance, that itself will take a significant amount of your time for the practice unit. Now what has normally happened is that most of the practice units are probably at level 2, I'll say. Level 2 or level 3, most of them, majority of them. Level 4, only a few firms are there. But most of them are level 2 or level 3. Again, please do not worry about which place the firm is in, what is going to happen, all those things. Because right now, there is no, problem as far as this thing, it's only a journey as they say. However, there was a suggestion at some point of time in the past, thankfully not implemented, saying that your AQMM score will come in your peer review certificate. Your AQMM score will come as a part of your peer review certificate. This is what the CMAG has been insisting. They are saying that you've got this very good model, you please put it as a part of your peer review certificate. Suppose you are at level 1, then we'll have to ensure that you don't get into a level 1 situation, because you may not get whatever seniors out there getting also now, right? Level 2, level 3 is fine, but I think what the institute also has been saying is that right now this is applicable only to a few firms. Let the model develop slowly. We'll not put it right now. Over a course of some time, we'll try and bring this in and ensure that this, because we should be very clear that if your AQMM is going to come as a part of your PRC, you will want to get the maximum. You will want to be at level 4 only. You will not want to be at level 2 or level 3 also. If it is right now within you and the peer review, there is no problem at all. Right? Between you and the peer review, you can adjust and go, no problem. Level 1, level 2, no problem at all. Or level 2, level 3, no problem at all. But if you are going to get it as a part of your document, published document which goes to SEBI, you will want to say that right now I'm level 3. Little bit we'll talk and we'll make it level 4. Because it is very important. You don't know how SEBI will react, no. SEBI will say listed company only level 4. No level 3 also they may say. How do we know? They will say about 250 crores net worth will be level 4 only. Yes sir.
The recent certificate says the AQMA maturity level on the certificate.
It mentions this. Oh, very good. Actually very bad actually.
Yeah.
It mentions, okay, then maybe the reason why they done. So this was a suggestion given by the same age infinitely. If it is there, it's okay, but I don't know how the regulators are going to take this. That's a problem now. How the regulators are going to take it, this becomes a problem now. But you have one with you?
Yeah, I do.
What level is it?
2.
Very good. So I thought that meets the requirement. Level 2, level 3 is okay. We have no problem as far as that is concerned. But one of the other things which the institute has mentioned, but not actually sort of told it in a public forum or as a part of a document, is that don't worry about the AQMM score today. Look at the journey of AQMM. Today, if they are 2, next cycle are they 3. That becomes very important. If that improvement is there should be no problem at all. There should be no problem at all. So I think we need to be a little bit careful here. As peer reviewers, your job is going to go and give an accurate assessment here. But we know for a fact that because this is only I think if you look at the number of questions and the answers also, I think most firms will automatically get to level 2. Will automatically set to level 2. Without any effort, they'll be in the level 2. Level 3, little bit more work may have to be done. So I think that also becomes a very important aspect for you all to worry about as far as your peer review is concerned. Okay. I think this is what we will cover right now. We will look at the ethical standards a little bit later on. I hope that the person who's supposed to suggest tea is not here. So, anyway, but are there any questions we can take before that? Do you have any questions? Yes, sir. Sir, please sit down. No worry, please sit down.
Sir, in small towns and written small places, there will be only one partner, and you may have article clerk or paidist. And following all the level of SQC, following everything is very difficult for him. Most of the documentation is not there, and he himself is not updated with the Companies Act or the standards.
Okay.
So what level peer reviewer has to do about
Very
single partner? No, he becomes engaging.
single partner is even proprietor.
Yeah,
Proprietorship.
correct.
Okay, so I think question well taken, sir. I understand that you will have many of these small places wherein we can relate to what he is saying. Sir is saying small places, single audit will only be the audit is also will only be partnership firms. You may not have private companies, maybe one or two private limited companies. For those people, sir's question is why all this SQC1, why all this AQMM, and if a peer reviewer goes, he will only come back with bad memories. He is not going to come back with any happy memories. So what is it required? I think more direct question is, can we get an exemption for small town practicing chartered accountants like what he has said? I think that is...
And they are interested for level 4, sir. Because if bank audits, there's a peer review is compulsory, they want to get into peer review. Or else they don't want to get into.
Only for bank audit.
Yeah.
Only for bank they want level 4 automatically.
Peer review they want to get
Straight away level 4 they want.
They want to get peer review done.
Fair enough. I can't, blame them for wanting a level 4. Everybody wants a level 4, but they will not get it. That's a different issue altogether. But sir, I think the answer is, this has been raised. Obviously, this has been raised. Institute is also aware of this problem. They know the fact that many of these firms do not have all these provisions may not be, so applicable to them and all those things. But I think the response of the institute has always been that you need not be 100%. Right? You need not be 100%. In whatever small audit you are doing, maintain the minimum documentation. You can get all the marks for the documentation. You can get a lot of marks for the documentation, but I want to give you an exemption because the moment I give an exemption, audit quality tends to drop. All what we have been speaking about in terms of the threat of familiarity, all of those things will come into play again if I don't have this documentation. So therefore, a certain minimum level of documentation they are saying. So if you look at even the SQC1 and all of those documents here, Institute has always been saying that to the extent possible, please fill it in. Most of these are tuned towards district company audits. They may not be applicable to the case which you are saying also. You can't expect an exemption because they feel that if they slip up now, there will always be a slip up in the future also. To the extent possible, please maintain it. For bank branch audit, if they want level 4, I'm very, very happy that they have to do it because let me give you a small thing which is important. The Reserve Bank of India has finally taken 10% step towards implementing Ind AS for banks. 10% by mandating an ECL model. This is as per Ind AS. All those complications have been decided on later on. I tell you the very simple fact here. The conceptual thing in Ind AS has always been that the best person to provide for a loan or to decide how much to provide for a loan is not Reserve Bank of India. It is the person who gave the loan. Reserve Bank of India can say standard, substandard loss, 1 year, 2 year, 3 year, IRAC norms and all those things. Those are regulations. ECL model now is saying that I will give you a floor for the provisioning. The floor means minimum has to be like this. If you want to provide more, please use the ECL model given by the bank. The bank will have a ECL model. They will say that in case of these particular loans, if you want to provide more, please use the ECL model. Every one of you who are doing branch audits from next year onwards will see that that particular branch is brought out the ECL policy. Additional provisioning at the branch level, please remember, at the branch level will be done as per the ECL model because this has already been implemented by the Reserve Bank of India. If they are doing that, sir, even for your small firm, audit quality is required. What documentation they have maintained for that provisioning, for that bank audit? What is the basis of the recommendation? All of this will become. So even there it is the requirement. My only suggestion to you will be that to the extent possible, please follow it. I can tell you also, sir, that I won't say 90%, 60% will not be applicable for you. For the firm you are talking about, the 60% will not be applicable. Please fill not applicable, not a problem, but maintain that particular document.
No, sir, I am not talking about AQM. I am talking about general peer review.
Generally, I am saying, that's what I am saying.
General peer review itself is a...
Peer review itself is full of sectors only, no, sir.
Yeah, that itself is a...
So I am saying 60% will not be applicable for you. That you say not applicable, no problem. But you can't get an exemption is what I am trying to say. Over that? Okay, we'll wait for tea and come back. Thank you. I just touch upon the ethics part. Excuse the quality control could also be a little bit of repetition of what we have seen. This was also supposed to be done by Hina, but since she is not here, I am doing that, her part of this thing here. So, one of the statements which the PRD has always been making is that the peer reviewer only looks at systems and procedures and not the audit opinion. It's a very important statement to make because what you are going to go and try and look at is what are the systems and procedures which the audit practice unit has got. See, audit opinion is a question of judgment. You cannot question that firm's judgment provided they have documented the judgment properly. That is only going to be your reason for the quality review of the peer review which you are going to do of the practice unit. You should only check whether the judgment is appropriate or appropriately documented or not. What is the system and procedure which is being adopted for the judgment to be done there? I put it in this way. You may not be able to ask a question, why did you give a qualified opinion? That is not your job as a peer review. But if you change the question to on what basis have you given a qualified opinion, the answer will change definitely. He will give you the reasons why a qualified opinion is there. So he will give you the fact of the matter, what has happened, whatever has been taken place and all those things. There are some situations, especially in PSU undertakings. We have got this rather unique situation wherein some PSU undertakings do not mind audit report qualifications. I am not talking about the big ones, I am talking about the state government PSU, state PSU undertakings. They do not mind having an audit qualification. For them it is parvagila hake sir. Last year 19 hake parvagila, no problem. For them they feel that the audit quality is more with more number of qualifications. They seem to be feeling it. But then, if you look at it from a very independent perspective, I'll give an example of Karnataka Power Corporation a few years back. Karnataka Power Corporation, about 4 or 5 years back, audit report had got 17 qualifications. At the end of the 17th qualification, the auditor is saying that subject to all the financial statements are true and fair. But if you look at the impact of the qualifications, the financial statements can completely change. It can completely change. The profit can become loss, share capital can be eroded, it can not be a going concern, many implications can follow, right? So it so happened that at that time, KPC wanted to transition to Ind AS. And they just called me for only for the purpose of discussion, not for anything else. They had already appointed a big firm to do India's transition in 2017 itself. But there were a lot of India's qualifications in the audit report. So I asked them, when you have got such a big firm to do your India's transition, why are you having so many India's qualifications? Either the auditor has not understood the India's implication or India's implementation was wrong. So Karnataka Power Corporation gave me a response which I am very surprised even till today. He said the firm which translation to India's gave the report in English, we didn't have Kannada translation. So therefore, our officers down the level did not understand what was the impact of India's. So I asked him, what is my job now? He said, give me Kannada translation of India's. If I do the Kannada translation of India's, out of those 17 qualifications, 8 qualifications will go away. What is the word for reserves and surplus in Kannada? I do not know. What is the Kannada word for other equity? I do not know. So I told them that I can tell you India's, but Kannada India's is not different. You got to get a translator for that, to do that. They wanted an accounts manual in for India's in Kannada. Promptly they appointed somebody. That person gave a Kannada translation. India's was implemented. Next year audit qualifications came down by some 10 qualifications came down. Now today they are only having some 4 or 5 qualifications in audit. So why I spoke about this is because many a time the auditor's opinion, please remember I have told this in many forums. If you want to say something in your audit report, whatever the matter may be, in today's SA 700 series, there are enough and more paragraphs to say it. You've got EOM, you've got other matter, you've got qualification, you've got key audit matters, you name it, audit report has got enough and more paragraphs and space for you to say what you want to say. Question is, will you say it or not? Or will the auditor say it or not? That becomes a very defining factor. Your job as the peer reviewer is going to be that whatever the stance taken by the auditor, don't question it. Don't question his stance. He may have a qualification, he may have dropped the qualification, he may have put it to EOM, he may have removed the EOM, he may have put it in key audit matter, doesn't really matter. All you need to know is what is the reason behind it. Many a time you will get the response, previous year also there was a qualification by a different auditor. Now that is an argument which will not sell. Just because there was a qualification in the previous year does not automatically warrant a qualification in the current year. You will have to see, okay, whether it's really warranted, not, facts have changed, circumstances have changed, all of those things. The reason why the ICA has always been saying look at the systems and procedures because it travels across the audit. The system and procedure should travel across the audit. It is not only in the final audit report, it is in documentation, planning the audit, ultimately ending up in your audit report itself. Many a time when we look at an audit file, what do you get? If you look at SA 230, the requirement is very clear in SA 230. SA 230 says that any person not related to the audit, if he looks at the audit file, he should be able to make out how much of audit has been done, what audit procedures have been performed, and what is the conclusions which have been reached. Please remember, any person not related to the audit opens the audit file, he should be able to make out how much of audit has been done, what audit procedures have been performed, what conclusions have been reached. Your job as the peer reviewer is to see if such a file exists or not. Invariably, it will be there with a requirement for a lot of improvement. The audit file should actually start becoming like a process. Right from the time from the planning stage up to the audit opinion stage, everything should be contained, if possible, in one single documented file. The working papers, the permanent file, all that can be separate. So when you look at the audit file and if you go progressively, you will start with the audit program, audit plan, you will see what has been done in the audit, checklist for auditing standards, checklist for accounting standards, carve-out checklist, everything. Most important will be how has the final audit opinion been issued. Now, invariably what will happen? The firms, as sir also mentioned, you may not have too many partners. You may have a single partner. Okay, single partner is a proprietorship, but still single person who is running the firm. Who is going to do the peer review for that firm? I'm not talking about peer review, I'm talking about review the firm own audit. There is nobody else there. You can't give it to anybody else apart from that. ICA has been sensitive to this. They are saying that if such a situation, you need not necessarily want to get a separate, they call it as EQ, Engagement Quality Control Partner. You don't have to do that, not required definitely because you don't have a staff. However, firms are encouraged to get an external quality reviewer. That also they are saying. They are saying not required, but if you want to get somebody from outside to look at your quality control systems. Maybe it's a one-time exercise. It all depends upon the audit also. So please look at the procedures. Please look at the systems in the firm. In every audit file, please look at one document which is very important, invariably missing. What were the major observations in the audit and how they have been concluded? This can be a single sheet of paper. It doesn't have to be 20 pages. You should not get in that document, insurance document is not available. That is a vouching problem. What are the major observations during the audit and how they have been concluded? You could have, say for example, revenue recognized after 31st of March. To give an example, they may have a cutoff of 5th of April for the revenue recognition. What is the conclusion reached on that? Do you have enough documentation that beyond 5th of April no revenue has been recognized? So please look at this single sheet of paper. Invariably I can tell all of you all that it exists but not in a complete form, which means that major observations are there but how it has been concluded is invariably not there. If it is not there, you should definitely insist on it not and it have to be provided to you, because ultimately the end result of an audit is forming an audit opinion. If you as a peer reviewer are going to go and check the procedures and systems, you should know what basis it has been done or what is the reason why they have reached a particular conclusion. Carrying out the previous year's qualification just for the purpose of it will not sell in the current day and age. You would have to still justify it. You will have to say, okay, previous year as a qualification, I verified it, facts and circumstances have not changed, therefore even current year the qualification is continuing. That one single document, please insist. It is called as Audit Conclusion Memorandum, ACM. You can call it by any name. You will have to ensure that, in fact, when you get the peer review appointment itself, many people go ahead and tell them that please keep these are requirements. One is Audit Conclusion Memorandum. It has to tell you what are the major procedures done, or what are the major observations and how they have been concluded. Many a time you get the response, nothing sir, everything is okay sir. All major observations have been solved in the audits. It may be true, doesn't really matter, but still you will have to make one document says that no major observations were there, or whatever little observations were there have been carried out successfully. Entries have been passed, therefore there is no major observation which has to be mentioned in the audit report. Unfortunately today what is happening is that, though this is not going to reflect upon you all as peer reviewers, people have started questioning audit reports also. People have been looking at audit reports also and saying that, is the auditor saying everything which has to be said? Why is he not mentioning this? Especially when there is a problem, they are looking at it even more deeply. Why has the auditor not mentioned this in his previous audit report? Definitely I think that over a period of time, audit quality, I still maintain this, has definitely improved. There is a lot of scope for improvement, there is no two ways about it, but we are seeing more and more comments in the audit report now, which is actually a very, very good thing. But again, what is important is, in that audit file, do you have this one single document which can actually explain to you the entire audit itself, right? What has happened in the audit, what are the major observations, how they have been disposed of. Problem will arise in many cases wherein, say for example, previous year there was a qualification, this year you have dropped it because you have taken over as auditor. Why have you dropped it? Or the firm you are going to as a practice unit has dropped the qualification, why have they dropped it? They have shifted from EOM to other matter. Why have they done that? These procedural aspects become very, very important. So please look at that a little bit very, very carefully, right? SQC1 is a document which has been much spoken about. Now, of course, the institute will come out with a new set now, but they have actually deferred it continuously. I mean, they have indefinitely deferred it now. It's called SQM1 and SQM2, which is issued October 2024. But right now, don't worry about it, it's been deferred. You still have to sit with the SQC1 only. The SQC1 is not only a document which summarizes the firm's quality control, what are the procedures they have for quality control. It also gives the firm a sort of a guidance as to whether they are doing everything as per the code of conduct of the institute, whether all the independence requirements have been met, and all of those things are there as a part of your SQC1 itself. So this becomes a very, very critical component which is there. So you will find that at least recently, of the last 3-4 years at least, you have SQC1 in many, many firms. You have got this detailed this thing here. As a peer reviewer, when you go and ask for the SQC1, in fact you ask for the SQC1 the moment you get the appointment itself. You tell them, please send me your SQC1 by email itself. That will be your first requirement. So you will know, when you get over email, you know whether this firm has got a particular, system for audit quality control in place. Again, when you go on a field visit to the practice unit, you will have to test the application of that SQC1. Are they actually doing it or not? I'll give you a very small example because many a times this becomes a problem here also. One pretty reasonably big firm in Bangalore, they had a couple of large listed entities, and one partner was signing that same audit report for 5 years. The partner was signing the audit report for 5 years, and their SQC1 said that end of 5th year the signing partner will change. As a part of the SQC1, they said at the end of the 5th year the signing partner will change. Now, when they mentioned this, the client was very unhappy. The client said, no, we are comfortable with the money, let anybody come and do the audit, doesn't really matter, but you only have to sign. This became a problem because what he was challenged with was, he's saying my SQC1 is saying that 5th year onwards I will not sign. The client had a very simple question to ask. He said, okay fine, I understand SQC1, we've got a system of quality control, partner should rotate. Who is the new partner who is going to come for the audit? We have to get him used to our audit procedures and whatever, our client, our company's environment and all those things. So they told the partner that you bring this new partner from the 6th year. 6th year also you sign. 7th year let him sign. He will become familiar with our company, we become familiar with him. Threat of familiarity. Right? 7th year we are okay, let him sign, no problem. So this partner said, okay fine, we will do one thing. All he had to do was revise the SQC. All he had to do was revise the SQC and say that it is not 5 years, it is 6 years. He did not do it. When the peer reviewer went there, they said that you are saying 5 years, but you are still signing this audit report, quarterly results you are saying, why is this there? So he said, no, this is what has happened, from next year he will be signing. You see, unfortunately, the peer reviewer did not have a documentation to say that this person is going to sign from next year. So he said that, I'll give you a suggestion, please amend your SQC. The partner was waiting for the suggestion of the peer. He said, okay, amending SQC, he said, no, I'll make it 7 years now. I'll err on the side of caution. Now the SQC says 7 years now. It doesn't say 5 years now. These are small procedural aspects we have to worry about. However, if you look at it from a very practical perspective, lot of analysts today, they have given this comment on Infosys also, saying that the same audit partner signing the audit report after 5th year also. They are a 10-year term. Let the audit partner change. Independence comes only when the audit partner changes. One of the documents or one of the requirements in your SQC will be that does the audit partner, do you have a system of changing the audit partner? It should not be only for the purpose of changing, the audit partner should actually change. So I think these are the areas wherein you will have a little bit of a challenge as to how you can worry about these particular things here, okay? So we'll just look at a few of these controls here. Independence, we all know. Maintenance of professional skills and standards, outside consultation, staff supervision, office admin, just a few aspects of these things. Independence. If I ask all of you, are you independent, what will be your answer? I will definitely say yes. Nobody is going to say no, because then you can't get the appointment itself. Right? This concept of independence, this test of independence, again when you go back to your units as a practice unit, when you go and ask this, they will say, can you please get an independence sign off from the partners and all the staff who have been involved in the audit. Many a time, it is only signed off. Many a time, it's only signed off. In our own firm, I should admit, we had this situation wherein district company audit, Chennai based, got the independence and all done, partners all signed, I was the signing partner and team was deployed. Q1 we did, Q2 was balance sheet audit, so we had to spend some time in Chennai and we got this independence done the day the staff were traveling. So they were traveling in this Vande Bharat or whatever train it was. Article clerk calls me up and says that, sir, one small problem is there. What problem is that? I got some shares in this company. I don't know on what basis did you sign that independence? You should have told me at that point of time. He said, no sir, on the train I already sold off all the shares. He also told me how much of loss he's made. I told him that is beside the point now. However, since you have got this situation, you can't be a part of the audit at all. You please come back, we will replace you with somebody else. Now that you have told me I can't make you a part of it, even though you may have sold the share, I do not know how many shares he has got. He may have kept some shares also. But then he came back to the office and confirmed that he has got more shares and all. Please remember that this signing off is not only a document, it has to be proved also. How are you going to prove this? Very difficult. Very, very difficult. Almost impossible if you ask me. Today if you look at all this technology and people doing trading on the app and all those things, how do you know? Day trading also can happen the same. They are doing the audit, they are doing day trading also. You have to be a little bit careful on this, but very important to note that as a sensitization session itself, even before the audit is taken up, you tell them that any interest in the company you have got, please disclose it. You may not tell this in the when they join or whatever it is, but especially when they are involved in the audit, you will definitely have to tell them. So please be a bit careful of that. Professional skills and standards, need not tell all of you all this, all of you are here only for that purpose. We have one good thing with ICA, right? One very good thing with ICA is that you name any topic related to profession and not physics and chemistry. They have literature for that. Any topic you name. In AS they have got literature, AS they have got literature, GST they have got too much of literature. You name the topic, there is literature for this. That is very good with ICA. On this professional skills and standards, code of ethics, it is now like Sampath Iyengar and income tax now, 3 volumes. We did a session recently for the Bangalore branch itself, code of ethics. 3 hours is not sufficient for code of ethics. You should have 3 days for that. But who will come for 3 days on code of ethics? Nobody is going to come, right? They have got the content. ICA has got content for everything. There is no problem at all. In fact, I have always been telling the ICA that the Accounting Standards Board of the Institute, when I was a member of the Accounting Standards Board, I had access to some of their literature, the questions raised by companies. You will not believe the quality of those questions were absolutely amazing, especially from the PSU undertakers. Not the ASC opinions. Questions asked to the ASB itself. They've got such a treasure of literature with them. I told them that please publish this for the members. Let them know about this. They should know what stance has been taken by the ASB, whatever may be the reason for that particular stance. Amazing sort of questions have been asked, but of course they have their own reasons for not giving it. But anyway, as a peer reviewer, when you go to the practice unit, you will note that do these people have enough of experience in updating themselves on professional standards and all those things. If it is not there, go back to outside consultation. Have they taken outside consultation? It may not necessarily be that you may not have experience in some areas. Have you taken outside consultation? Again, I link this to audit conclusion only. Why do you want to take an outside consultation? Only if you want to know whether there is an audit conclusion which may be involved. Very important for you to know this, right? And of course, staff civil development, no problem at all. We don't have to worry about that. Professional compliance monitored, association reviewed periodically. Financial statements prepared by the practice unit itself reduces independence. We know that, of course, nowadays I think we are not doing this, but in some cases we are doing that. Two important parts of the client's documentation or the client's ecosystem are always with the auditor. One is tally backup, second is DSC. What else you want? Tally backup is in your office only. DSC is in your office only. Tally backup edit mode is also there. You can do whatever you want. Correct? So financial statements being prepared by the practice unit is a definite problematical situation. Are we doing it? Maybe. Should we tell it? Definitely no. You could have somebody else to do it and all those things. See, we have to also look at this practically. As sir also mentioned, in a small town situation, auditor is everything, including matrimonial alliance also. What will happen there in such cases? He will do everything, auditing, accounting, matrimony, everything he will do. Independence is definitely not there. How will you manage this? So the thing says that there is a threat to independence here, which is also a fact. In fact, I remember this when Ind AS came. Depreciation schedule in the Companies Act. Ind AS has always said that just like loans, I told you, best person to decide useful life is the person who is running the asset, who has purchased the asset, not Companies Act. I purchased the asset, I know how I'm going to use it, I decide my useful life. Companies Act may say whatever they want, but I will decide what is the useful life. So when the first edition of the schedule came, the Companies Act said these are indicative useful lives. And useful life can change every year. Can you imagine what will happen? Indicative useful lives and useful lives can change every year. This is what even IFRS says even today. Assessment made, you can change every year also. But then MCA thought it better. They said that if I give Indian Chartered Accountants this opportunity, what will they do? Depreciation will become balancing figure. I will compute my net profit, I will compute my tax paid, I will work backwards and get my depreciation figure. So today the wording in Companies Act is useful life will normally not be different from the schedule. Complete change in wording, which means that I will have to prove why that useful life is different. I just can't say indicative useful life and therefore do it. I may have to prove it based on usage of the asset. Dish TV is a good example. Dish TV said that 7 years is their useful life for set-top boxes initially. 7 years. But then they came out with the statistic which said, the data which said that At the end of 3 years, 90% of users change their set-top box or throw it away. So useful life is obviously 3 years, right? So based on data, you can definitely change your useful life. So you can't do this. So please don't prepare the financial. But I'll give you a solution also. In those small towns, in those places where it's practical, get those financial statements prepared by somebody else. Could be in your own office. I don't say no. Let somebody else. You don't prepare, you don't sign it. That much of a diligence you should do. It could be anybody else. You ask them to do that financial statements, you can probably sign up there. Practically also we have to see how it is going to work, right? Okay. Just a couple of things here. Programs to build specialized industry and technical expertise. I will give this example again, repetition for some of you who heard in the past, but still. A large PSU in Bangalore wanted to convert to Indies. And I knew the CFO very, very well. This was 2017, 2018, and many companies are going over to Indies. And the PSUs, as all of you know, have got this rather uncomfortable habit of L1, which means whoever quotes the lowest, they will get the fund. So one firm in Bangalore, which has not been named, has developed this practice, art, magic. Whatever tender they are bidding for, they will bid 99,000 rupees inclusive of GST. Whatever tender it is, please remember, inclusive of GST. So they bid for this India's tender of this company, and company got quotations from 30 lakhs to 99,000. 30 lakhs was the big four, 99,000 was this firm. Mid-range of all other firms, we didn't apply because clash of interest, knew the CFO well, didn't apply. So CFO called me up and said, you know what, got a brilliant deal, 99,000 rupees I got. I said, what, 99,000 rupees, who will do Indies? I don't know, we are going by L1, forget about 30 lakhs, we're going by 99,000. Okay, no problem. So they said, okay, fine, we'll give it to this firm. L1 did not look at profession or what is this extra expertise, industry and technical expertise, gave it to that firm. Coincidentally, the partner of that firm comes to my office next day and says that, sir, I have a small request. We've got an India's transition. I want your help. Whatever your fees, I give it to you. They asked him, which company is this? He mentioned the company's name. Then I told him, see, I can't do this because I know the CFO very, very well. But he said, no, sir, anyway, can you come and help us? I asked him, how many people in your firm know Indies? He said, nobody knows. That's why I'm coming to you. So I called up the CFO and told him, boss, we have a problem here. You may have gone by L1. Lowest in terms of price, lowest in terms of quality also. You may have to rethink this. He said, how do I do this? It will be very embarrassing to tell them that, you can't do this. I said, you're not obviously put in technical parameters here. Do one thing, ask them to give a presentation on Indies. Judge them based on that particular basis. Let the firm come and do a presentation on Indies. But anyway, they got it and they did not do the Indies convention, they rebid the tender and all those things happened. That's beside the point. What is important is that, does the practice unit have sufficient capacity or personnel to actually do this? I'm giving a small example of Indies. It could be something as simple as AS also. That it may only be a tax partner. He may not know much of AS also. Has he done or taken outside help? Because please remember again, I'm going back to conclusions. If you don't know the standard, how are you going to conclude? That becomes a very important question. So you have to look at that from the point of view of trying to understand what this thing is required here, right? Most appropriate staff assigned, standardized form, checklists and working papers. So working papers, we all know very, very well what is there in the working papers. I told you about this document called as ACM, Audit Conclusion Memorandum. If that is the final output, raw material is a lot of papers. You will have a lot of papers as raw material. You don't have to discard or throw away the working papers file, but again, as a peer reviewer, you should see that how is the flow happening from the working paper file to the audit file completely. invariably you will find that in many working papers filed, for example, there is no continuity. All papers will just be put into one file. It will not be numbered section wise. You won't have section wise numbers. Many of such problems are there. Again, we completely understand the fact that this is possible because of the urgency to complete the audit. Timelines to complete the audit are shrinking nowadays. We can't focus so much on it. It's completely acceptable. However, please go back to SA 230 which says that you got a good period of 90 days to fix your audit file. In fact, SA 230 calls it as assembling the audit file. Assembling means what? You have to build the audit file. You can't do during the course of audit. The SA 230 gives you 3 months to build up the audit file. They call it as assembling the audit file. Have a basic minimum audit file. That's what you should check when you go to the peer reviewer as a peer reviewer. Ultimate audit file should be in a sequence, should have only working papers which are required. Many working papers may not be required also. See what working papers are required and then how the final audit conclusion has been distincted, right? Record retention procedures including security, registration of clients, engagement, staff register. Again, many of these documents today are available. You need not necessarily have to have a physical document here. You can have it on the cloud, you can have it in the electronic form, digital form. It is encouraged because you don't have to have the 7-year problem for digital form. You can keep it for as many years as possible. You don't have to go again, lot of softwares are also available now, checklists are available, lot of documents are available now. So you don't have to worry too much about which form you have to maintain. So you need not necessarily have to have a problem of having a big, large physical file there. It can be on the cloud. However, even on the cloud, even digital form, many a time you will have to explain what those documents are, right? You have to explain what those documents are. As a peer reviewer, you have to see what those documents are. I think one of the things we have to accept as a peer reviewer is acceptability of documents in digital form. We don't have to insist only on the physical form. Today, a lot of documents are permitted on the digital form. So as a peer reviewer, you may also want to look at digital competency. You should also be competent digitally. You should be able to see those documents digitally. Many firms today say they have got a paperless office, which is true because if you go to the office, there is actually no paper. Even newspaper is not there. How are you going to assess the peer review then if you go as a peer reviewer? You should be able to see all those electronically and see how those things are being maintained there. There are certain firms which are still there, which still insist that I don't like this digital and all, I keep physical file only. I want to have a physical file, I don't like digital, I want to have a physical file. It sweeps both ways, it doesn't matter which form is there. But the problem in a digital format as well as in a physical format is that how are you going to change that file? It becomes very difficult in a physical file. Becomes very easy in a digital mode, right? But within this 90 days, if you look at a physical file, where are you going to place those documents? Where are you going to place those documents? It becomes a very important factor. So you have to open the entire file. Digitally, when it is labeled sequentially, you know exactly where to place it. So as a peer reviewer, you also will have to look at how this can be maintained, this thing here. Okay. Quality mentor displays is not overridden by commercial or free considerations. See, peer review board has got this habit of giving some dramatic statements. One such statement is like this: quality is not overridden by commercial or free considerations. As a peer reviewer, how are you going to even check this now? You know for a fact that audit fee has been fixed. You know for a fact that audit fee has been fixed. Let us say it's a listed company, 25 lakhs is the audit fees. Reasonable audit fees. TCS audit fees is 19 crores for 3 lakh turnover. TCS audit fees is 19 crores for a 3 lakh crores turnover. Your company, listed company, 3,000 crores turn, 25 lakhs is a good audit fee. Audit fee wise, it is a reasonable audit fee. There is no doubt about it at all. But how are you going to check that quality is not overridden by that? It becomes a very important problem, right? So some people will say that, oh, you know what, if there's increase in audit fees, that means that something is there. So auditors ask for more audit fees only because some problem is there. Again, need not necessarily be true. Auditor can ask for audit fees only because his effort or the audit itself demands such an audit fee. But they've given this statement here. I will, to understand the statement first, I will go and ask the practice unit, what is your audit fee? He will say 25 lakhs. What was the previous year's audit fee? He will say 25 lakhs only. Or he may say 23 lakhs or 20 lakhs or whatever it may be. Right? Has there been any reason for you to change the audit fee? He will say, no, I am very happy, very comfortable. But if somebody gives me more, I don't mind taking. That every auditor who will say no for increase in audit fees. What they are trying to imply here is that just because the client is offering you a higher audit fee, do not compromise on audit quality. Please remember, I am not talking about audit opinion. I am talking about audit quality here. Audit opinion may be compromised because of audit fees. That's a different discussion altogether. Again, I told you that Lakshman Rekha you should not cross, that's all. But audit quality, which means that you will have to do what you have to do. The practice unit has to do what they have to do, irrespective of the fees. They have to do what they have to do, irrespective of the fees. I can give you an example. We have what we call as land bank company as a client. Land bank means only two items in the balance sheet. Land, share capital, reserves and surplus. Reserves and surplus because of revaluation reserve of the land. P&L account, no activities. Only ROC filing fees and audit fees. Land is worth about 25 crores of rupees. Revaluation reserve is worth about 24 crores of rupees. Remaining 1 lakh is share capital. 1 crore, the remaining is whatever share capital or whatever it is. This is a very simple balance sheet. No staff, only this company is existing only for the purpose of the land because of Urban Land Ceiling Act. Subsidiary of a listed company. Subsidiary of a listed company. How much of audit fees I should charge for this company? Kumar sir, ready? Yes, sir.
As per I see, 5 lakhs.
5 lakhs of rupees. This person is paying me 25,000 rupees every year. Why is he paying me 25,000 rupees?
Just for 6 seconds.
Just for signature. One. Secondly, there are 10 such companies. So he is going by volume, not by.
Numbers.
So he is saying 25,000 to 10 is 2,50,000 rupees. You are still better off. I cannot reduce even a single audit quality in that, even though I only have ROC filing fees. I still have to do my procedure, I still have to do whatever has to be done there, right? So, when they say that the audit quality cannot be compromised, means I will have to do what I have to do every year, not looking at the audit fees. That becomes a very, very important factor for us to understand, right? Okay. This is a very important situation. But anyway, KYC is becoming very common now. All of you know KYC. Instead of saying do KYC of client also. KYC means not of client, not asking for his Aadhaar card. That is not KYC. KYC and background checks. Institute is saying now that before you take on a client, you go back and see what is his background. First question I am going to ask me is, where should I go? Whom should I ask for background check? Should I go to police station? Should I go to ROC? Should I go to SEBI? Where should I go? What do I do for a background? Should I hire a private person to go behind the client every day? Very difficult to answer all these questions. However, you will observe that invariably what will happen is that there will be some information in the public domain about this particular company. Invariably. If it is not there, you should assume that there is nothing we can do about it. You are taking them on good faith. They use a very good word, trust but verify. They say trust but verify, which means trust that he is a good client, but also verify it. many people ask this question. Peer review board said a very interesting thing. They said, don't go by phone call, go and meet the client. Before you accept the assignment, go to the client's office, sit with them, talk to him, see how he is. Does he appear slightly problematical? Does he have a gun on his table? A gun he may not have, but there will become intimidation threat there. That is a different threat by itself. So what they are saying is, even before the practice unit takes a client on, are they doing this due diligence check? Which means that, have they had a formal meeting with the client? Have they assessed whether this client is okay being taken on board? Because please remember that most of the time, where do you get new clients from? Invariably from references only, right? It will only be from references. You are not going to get it off, walk-in clients you are not going to get. Somebody is going to refer to you. If you know somebody in Hosur, you want to somebody in that place, you have to go and ask them only, right? When the reference comes, you should do this. Here we were saying, go and ask him these questions. How long have you been in business? Don't ask, are you a good client? He'll say yes only. Right? How much is the audit fees? Is the audit fee sufficient? This becomes a very important factor, because in that first meeting you can gauge what sort of a client he is. Whether you want to take the client on despite that meeting is completely your call. It's completely your call. What you want to take is completely your call. But at the same time, you should also be a little bit careful, because I'll again give you this thing which happened from experience. All of you must be knowing this. There was a cooperative bank in Bangalore called as Guru Raghavendra Bank. God's name, but lot of ungodly things happened in the bank. Lot of frauds were committed, and the person committed suicide. All those things happened. So what the RBI did was, they appointed a forensic audit. They did their own investigation also. And they appointed a forensic auditor, which was again a very large firm. 2 forensic auditors were appointed. Somehow, I do not know what was the reason, the forensic audit reports were not very clear. I'll put it that way. The forensic audit reports are not very clear. They said, okay, fraud has happened, it may have happened because of this situation. Very generally worded forensic audit reports. It so happened that somebody knew about us, and so one of the chairman of the bank who was running this as a liquidator called me up and said that, sir, we have this requirement. We want a forensic auditor. Would your firm be interested? I told him, sir, when you already have 2 auditors, why 3rd auditor? Why do you want a service? He said, no, you only. You just tell me yes or no. I'll tell you what are the requirements. I said, okay, please email me the requirements. I will see if it is possible or not. He sent me the requirements. There were 2 requirements there which made me refuse the offer. One requirement said that you should specifically put blame on the officer who has done the fraud. I told him, I can't do that. You should specifically put blame on the officers or officer who has done the fraud. You should identify and put the blame on that person. So I called him up and asked him, sir, why was this not done previously? He said, nobody is able to identify who did the fraud. I said, how am I going to identify it? When 2 people are not, how will the 3rd person identify it? So I told him, I'm sorry. The second thing which he mentioned was, you should come and give evidence in a court of law. Karnataka High Court will call you for this. You should say this person has done the fraud. I told him, I'm not able to identify the person, how will I come to the court itself? I can't do that also. So many a time, you will also have to look at situations wherein, is there a reason why you should say no for the audit? That also becomes a factor you should realize. Okay. Human resources, I will not worry about, but I'll just spend a minute talking about AI, because it is invariably coming to hit us. AI works both ways, for the good as for the bad. I'm sure that many of you are much more capable and competent in AI than I am. But whatever little I can do, I can tell you all. Use AI liberally but cautiously. Right? Don't outsource your thinking to AI. If you are a peer reviewer, you have got this practice units, numbers in front of you, you've got these files in front of you. Don't ask AI whether I should give a good opinion or not. That is purely your judgment. SQC1 you want a format, get it from AI, I have no problem there. You want a format for quality control, get it from ChatGPT, no problem at all. But should I give this firm a good review or not? Don't outsource that. That thinking is entirely yours only. So please be a little bit wary of this, because sometimes we tend to overestimate the requirement of AI. I also told you about this audit summary memorandum, standardized forms, checklists and questionnaires. What is the documentation which has been secured? Also very important. Engagement quality control review. Already spoke a little bit about this. We have, despite the general need that there should be one big four accounting firm in India, all those things, we still have to live with the fact that accounting firms in India are invariably spread, varied across geographies. Invariably, I think 80 or 90% are 2 or 3 partner firms. Maximum 4 partner firms. I mean, at least for the audit and assurance practices. In such a firm, are you going to appoint a separate person as an engagement quality assurance for to do the EQR or the EQCR it is called? If you look strictly at what the PRB is saying, it is required. It is required. One person may be the designated audit partner. Any one of the remaining partners should actually look at the file and say that I have done an engagement quality control review. We know for a fact that practically it may not be possible. I'll put that out straight away. Practically, because you may have a tax partner, for example. You may have a GST partner. How is he going to come and sign off as EQSA on an audit assignment? It is going to be very, very difficult there, right? This is a practical problem which the practice unit where you go to for a peer review will have to surmount. In all good intentions, if they really have the situation that there are 2 tax partners, the remaining partner is incapable of, I won't say incapable, but the remaining partner is not expertise enough to do an assurance audit or check for quality control, I think it is better for them to get an external person to do this, at least for the first time. Please remember this, at least for one time, because once that engagement quality review happens, the suggestions come in, it becomes much easier in the next cycle. Next cycle of peer review, after 3 years, you will find that it becomes much this thing here. So the requirement is that objective evaluation of the significant judgments which have been made before the report has been issued. Technically competent but independent. This is why I am insisting that you may want to get it done from an outside person. You may want to increase your audit fees accordingly, no problem, get it from the client in some other form. But whatever the external person is charging, maybe it may be worth doing this for the first time at least, because it becomes very important for us to do this from a quality control point of view, right? No documented SQC manual, generally not, I've already mentioned this, so I'm not going to talk about this. Monitoring annual inspection, not performed or not documented. We all know this. Again, the takeaways have always been that in the limited time we have for an audit, how much of quality can be maintained. I think this is a challenge, especially for listed companies, wherein the time frames are only shrinking further and further nowadays. Many people say that Infosys gives their financial results on 11th of the next month. Why can't we also do it? But Infosys has got 200 people as chartered accountants. You have only 2.5 people. There's a difference there, right? 200 people was 2.5 people doing it and giving on 11th. There's a problem there actually. So you should realize that resources become a constraint. When resources become a constraint, you can't do it on 11th. And practically also what is happening is that because of these crunch timelines, see, let us face one fact. All of us as a community, let us face one fact. Use 31st March 2026. Let us say it's a non-listed company. When will you commence the audit? Listed company means you have to do it by May end. So let us say it's not a listed company. 31st March 2026, non-listed company. When will you start the audit?
July.
Okay, July or August. When will you complete the audit?
September 30th,
Correct. July ಶುರು ಮಾಡ್ಬಿಟ್ಟು ಸೆಪ್ಟೆಂಬರ್ ಮುಗಿಸ್ತೀರಾ. It's almost spanning about 2.5 to 3 months. All these 3 months you have to maintain audit quality. Okay, let us assume that you are also good in audit quality because you have come for this peer review program today, you know what audit quality is. Most important, when will client give you data?
29 September.
After
September, sir.
After September, after the audit is over. We have this amazing consistency across all clients in India. The non-important data will come immediately. Non-important data will come immediately. Salaries, already paid.
Register.
Salary already paid, you can't do anything with it. You can't revise salaries now. Even if it's a 12 months salary, what is it? Or 100 employees, you inspect, sir, no problem. Revenue recognition, August 10. Sir, GST reconcile ಮಾಡ್ತಾರೆ ಕೊಡ್ಬಿಡ್ತೀವಿ. Both will not reconcile. So you observe that as the audit progresses, the most important data is withheld for the ending, right? Now this is a problem for you, I mean not for you all as peer reviewers, but for the audit firm. Because in this entire 2.5 month cycle, they are supposed to say that every single time I'm going to say that, okay, I'm going to have a quality which is going to be maintained throughout the audit. If you look at the audit team also, their interest in the audit, which is very enthusiastic in the beginning, will slowly start getting down. By the time August end comes, they will say that as long as this audit is over, I am happy. I will not look at GST reconciliation. Bandre or Barli, rather provide account. So you can see there is a multiple factors that play for audit quality, right? Do you want to change the audit team? Very dangerous. Don't do it.
ಅಲ್ಲ ಇರೋದು ಇರೋಲ್ಲ ಎಕ್ಸಾಮ್ ಹೋಗಿರ್ತದೆ.
Exam ಹೋಗುತ್ತೆ. ಅದು ಪ್ರಾಬ್ಲಮ್. Correct. ಅದು ಪ್ರಾಬ್ಲಮ್ ಬರುತ್ತೆ. So what you do with all these circumstances, that's a challenge you have to probably wonder. However, that is why the institute is saying that it doesn't matter. You complete the audit as per your whatever timelines is there. Ensure that the documentation is done subsequently, critical documentation. As long as you freeze the numbers and you freeze your opinion, there should be no problem at all. Luckily what happens here, in these audits, invariably what happens is that in this 2.5 months time, we also do the Caro report, we also do tax audit here. So multiple things we are doing at the same time. Again I can't go back for Caro. If I go back for Caro, I tell sir, how many times will come, sir, go, no, only 2 weeks. Tax also we are doing off in the same cycle of this 2.5 months. So this is a practical problem because please remember that you will pick up at least one non-listed company for your peer review. In the course of your sample, you will pick up definitely one non-listed company. One bank also, even if it's a branch auditor, you will pick up for your peer review, right? In those circumstances, it becomes even more difficult for you for the practitioner to maintain this audit quality. Please insist on that. Things are improving, I'm not saying no, but still, we have these practical challenges. You go back to a bank audit. How many days you take for a bank audit?
4 to 7 days.
4 to 7 days.
2 days we have to finish.
2 days, huh?
Branch audit has to finish in 2 days.
ಸರ್ ಝೋನಲ್ ಆಫೀಸಿಂದ ಫೋನ್ ಮಾಡ್ತಾರೆ ಥರ್ಡ್ ಡೇ.
Or they'll call for report even for your appointment also. They will do all those things. But again, please remember that if you get into the peer review mode for bank audits also, you are doing a bank audit in 3 days. One thing is very clear, which is that your appointment is guaranteed. That document is definitely going to come to you. Problem is after the bank audit, what happens then? What happens after the bank audit? In fact, I'll just give you this small example, though it is not a very good example to give. You look at the NFRA report on DFHM, Diwan Housing. Right? Almost about 34 audit firms across India have been banned by the NFRA because of this Diwan Housing audit. Right from appointment, they are saying that everything was a problem. Right from appointment. They have some firms in Mangalore also who have been, debarred. Wherever the branch auditors. Many of these branch auditors have actually gone back and told the NFRA that, can you please look at my long form audit report? What is that? I don't know an LFA and all this. Main audit report is so much a problem. Forget looking at LFA. The defense which the audit firms were having is that many of the things you were actually pointing out is actually there in the LFA. But then they did not even look at it because their problem was, their mission was only to, I already told you that. So in these limited time audits, lengthy audits, this problem is there. What I think I would suggest to all of you all as a mechanism to ensure that these problems do not flare up. You have an open mind as a peer reviewer. You have an open mind. Look at the degree of the problem, right? This is where your assessment comes in very critical. The assessment comes in at this very critical stage. What is the degree of the problem? One chartered accountant in Bangalore was undergoing a peer review, called me up and said that, sir, peer reviewer has pointed out one major problem and what should I do? He didn't say major problem, but he said, can it become a major problem? I said, what does he point out? He said, we are undergoing a peer review for the last year, I think, 31st March 25 it was. What this CA has done is, he has wanted to give a UDIN, generate a UDIN for a certificate. When he went to generate the UDIN, all of you know that one drop down will come, firm name. Drop down was not working that day.
Yeah.
Drop down did not work, he immediately chose individual name. In 5 minutes, generated UDIN, gave the certificate. Peer reviewer has asked a question saying that, how do I know the website was not working that day? How do I know drop down was not working that day? Do you have a screenshot? If you have a screenshot, I will accept the fact that it was not working. This poor chartered accountant said that, sir, urgent to issue the certificate, I took that decision. I did not think that I should take a screenshot. But next time I'll be a little bit more careful. So he called me and said that, will this peer reviewer take this as a major problem and report it to the institute? I told him, how many certificates have you given like that? He said, I have not seen, he said. I told him, please see it, because suppose there are 20 certificates,
All are same.
not same date, but 20 certificates means you are choosing that as a convenient option, not actually trying to put the firm name there. He said, thankfully there were only 2 there. Thankfully only 2 were there. So he said, this is only an exception. I told him, he will not worry about it too much, so you will have to convince him that this is only an exception, right? Okay. Probably next time, you should probably take a screenshot. So he said that, if I start taking screenshots every time a website is not working,
The 90% of case will be same.
will be same only. Correct. Not only you, I am saying, generally also. Right? How do I take screenshots for everything? I can't take. So what he did was, he told them that, okay, I understand this. I will definitely from next time onwards take this as a suggestion. In case the website is not working for whatever reason, right? I will take a screenshot. Peer reviewer dropped that point. Thankfully, peer reviewer dropped that point. And he gave a clean certificate and sent it to the institute. Institute has got, all of you know this, UDIN, they've got data now. They feed you every month the data, number of UDIN issued, number of issued, you revoked, all those things they give you. Institute observed for this particular CA in practice, 2 certificates are given in individual name. They first gave it only as a data point to him. He said that, okay, you have given this many certificates are given. Nobody questioned anything there. When he looked at it, he only got a doubt saying that, I will ensure that, see, because invariably who generates UDIN? Allah sir, forever. You will be sitting somewhere in Vrindavan Gardens. You will get SMS for OTP. What they have put, how do you know? You don't know. They may have put wrong partner's name also. But of course, if it comes to you, that means obviously your name has been put there. So he said that I will give an instruction that whenever the drop down comes, firm name does not come. Correct? I will not issue the certificate at all. He said, he took this very, very seriously in fact. I told him, don't get so tense about it because it's how long can you wait? Suppose not working for the full day, client is sitting in your office asking for that, what will you do then? You obviously can't do much about it, right? This is where I say have an open mind. If it is an exception, drop the point, no problem at all. If it is repeated, then there's a problem because that means he is obviously signing only individual name, he is not having the firm name, therefore those issues can obviously become a problem. Okay, so right, I don't think I need to talk about ethics because I think somebody else is taking that, so we'll have to worry about that only. I already spoken about a few things. I'll just talk about what I have not spoken about specifically. Intimidation or applying the framework. I also spoke about those threats, and one of the threats which we spoke about was intimidation threat. May not exist in a very visible form in the audits we are doing. At the same time, we can't rule out the possibility also, saying that you will have to sign it, some pressure is being applied, somebody else applies the pressure. What is the threat of that intimidation actually becoming a practical problem there? All those things become a problem, right? Okay. Do not quote below the ICA minimum recommended scale of fees. Please forget it. Remove the do not here. Right? Please remove the do not here because this is what they are trying to say here, but it's a practical problem. I've always felt that the fees is largely between the client and the auditor. Nobody should interfere in terms of the fees because client knows the auditor well, auditor knows the client well. Scope of work they only know very well. Neither ICA nor I know about it. So they should decide the fees. I only with this one caution saying that with the fees which has been quoted, can you do the work properly? Which means that can you do India's work at 99,000 rupees? Answer is yes, please go ahead and do it. If you cannot do it, don't do it. Get somebody, don't take up the assignment also, right? That also is becoming, you need not take up the assignment also. So you have to look at these factors also because that becomes a very important thing. Code of ethics, of course, I'm sure that Institute will do many other programs. They have also changed a lot of things. They are saying you can have some pull-push model, all those things there. You can look at that when it comes there. But no financial or business relationship beyond the ordinary with audit clients. See, sometimes what happens, this becomes a very difficult problem to also solve. CFO is having a function for having worked for 10 years continuously in the company. Very rare CFO works for 10 years in the same company nowadays. But the CFO has worked for 10 years. He is having a party. He calls you for the party. You are the auditor. Should you go or not?
Can go.
Can go. Very good. Please go. But such problems will come. If I go, will my independence be compromised? Nobody is saying be independent in the party. You should be independent in the audit only. You can go for the party, come back and either be independent or not independent. That depends. Only thing is that if you go to the party, will your independence be compromised? That is a very, very difficult question to answer. I'll just give you one example before we close. Rating agencies. One thing which came up in the entire scam which talked about an ILFS and all those places. ILFS in particular was the role of these rating agencies. All the financial instruments issued by ILFS had AAA rating. Not the highest was AAA plus, but this was AAA. Some instruments had AA also, but invariably good rating. And many people, the ILFS problem arose because they could not repay a particular bond on a particular date. That's why the entire thing cascaded. So people started saying, what is this rating agency has given? AAA rating, but still they could not default, they defaulted the bonds. It's a very interesting thing to talk about independence here.
That rating is based on past performance, no? May not be today's situation.
Correct, but cash flow gota. Cash flow you should know. So it so happened that ILFS people, this is actually true because it's there in the office in the public domain. The rating agency wanted, they had the chairman of the rating agency was a very big football fan. He wanted some tickets for Champions League final in Europe. ILFS people knew somebody who was getting the tickets. So ILFS people said that, sir, don't worry, I will give you tickets. I will book your flight also. Don't worry about it. You please go, watch the match, come back. Anyway, we are anyhow AAA plus. Don't worry about it. Please go and come back. So they bought the tickets for this particular, rating agency chairman. He went, saw the football match, came back. On a Sunday evening, he landed in Bombay. Monday morning or Tuesday morning, ILFS rating was due for renewal. The AAA rating was due for renewal. Discussion happened about whether they should maintain, downgrade or upgrade. Rating agency is having a meeting with the chairman saying that ILFS I should maintain, degrade or upgrade. What will be at the back of the chairman's mind?
Upgrade.
Sir?
Upgrade.
Upgrade. Why?
He got the match tickets.
He got match tickets, he went to Europe and came back. But he was a very independent chairman. He said, let's not upgrade, we'll maintain. We'll maintain, let's not.
Very cautious.
Whatever it may be, let us not do drastic thing. Maintain, not whatever. ILFS gave out, the rating agency gave out a rating on Tuesday evening saying that rating AAA maintained. Thursday, ILFS defaulted. 2 days after they defaulted on that monthly. Many people question this. Investigation has found this out and said that obviously this person was not independent because he gave a rating only because of the fact that they had vested interest here. It's all out there in the public domain. So independence can translate into such areas also. Correct? Are you going to go for IPL match sponsored by your client? Don't go. If you want to buy tickets online, buy it and go. Client will say, sir, audit report will give tomorrow, but today match is there. I've got tickets, please go and come. I am not saying that you will go for the match and not be independent. All those things are beside the discussion point. But independence is always linked to the word called as influence.
Perceived to be different.
It may influence your decision. Just because you've gone to the match and RCB won, you may say, oh, RCB won, Karnataka client, why should I qualify? You see, all these factors are influencing your independence. So please be very careful of that. These are very stark differences which are there. You have to be a little bit worried about it, right? Okay, so I've just mentioned this quickly here. One statement which I've made here. A control that is not documented and evidence cannot be relied upon by the reviewer. Again, as a reviewer, you have to look at control this thing here. What is the peer review journey from end to end? Planning, execution, documentation, reporting, follow-up. These are the 5 stages of peer review. And I think the most, let me ask this question to all of you as peer reviewers. What is the most important stage here? There are 5 stages here. What is the most important stage? I'm assuming that the follow-up stage is not very important because it's only like a follow-up, that doesn't matter. So out of these 4, which is the more important? Documentation, planning, reporting, execution. Somebody said all 4. My response is all 4 are important. In fact, all 5 are important, but all 4 are important. You can't neglect any one of these stages. Because in planning, you decide how much of time you actually spend on the field. If you have a very good feedback from the very good data inputs from the practice unit, you can spend minimum time at the field level, right? Execution becomes dependent on planning. If all the documentation have come to you in advance, execution becomes very important. Documentation is very, very heavy. That is a part. I'm talking about your documentation, not their documentation. Their documentation also is important. Your documentation is doubly important. Please maintain the documentation also. And reporting, discuss the observations, obtain representations and issue the peer review report. Have an open mind is all I'm going to say here. Look at the scale of the problem. Look at the scale of the problem. But if the problem is really, really bad, and it's easy for me to say it standing on the stage here, but when you go to the field, you will notice that there can be problems which are 50-50 problems. May be serious, may not be serious. How do you tackle those? I think the way to tackle those will be what the response of the client is, what the response of the practitioner is. See how they respond. Suppose they say, yeah, provider, sir, I know the ICICI president, don't worry, that's a problem there. So you have to rectify, the response will be to rectify, and finally you have to follow up for the deficiencies before the final report is issued. So please follow up and ensure that in case any documentation inconsistencies are there, have they been rectified? Are they going to be rectified? How much has been rectified? If you look at all of these things, you will definitely be able to give a proper peer review report. So thank you very much for a very patient journey. I wish you all the very best in your peer review journey. Thank you. Yes, sir. Okay, any questions there?
Sir, in ARM, initially a point was noted. Later in SRM, it was not addressed as a peer review. What we need to do.
Please repeat, sir.
In ARM, one point was noted, but it was not addressed in SRM.
In SRM. Why would
Just like example, the closing stock is huge, so we need to do inauguration, graduation. Those things are at the initial stage of planning. They have kept all the points. Later stage, that point addressing thing in SRM, it was not there. As a reviewer,
advisory. Report, please report it. Please report it.
report it.
It is bad.
And one more point I noted, you said that partner 5 years, you were the 6th year, they were not allowing them. Whether PM, if I said, it's okay.
Whether?
Partners internal memorandum stating that I have done
that
so
is
you can sign on behalf of me like that.
Yes,
Can be resolved.
that can be resolved. Yes.
Sir, what I found is, lot of places external confirmations are not there. What they do is they put it in MRL and they say that is sufficient. All to what they say from debtors or bank confirmations or creditors confirmations.
Okay.
So, can we take that MRL is sufficient for the...
No. So, sir, there are two things. After Satyam has happened, external confirmation mandatory.
Yeah.
If they have a confirmation, they should have a confirmation. That is definite, right? If they don't have a confirmation, do they have a reconciliation? Right? That becomes very important. If confirmation is not there, reconciliation also is not there, then there is a problem. MRL will not going to suffice there. MRL will not help you.
Can we do subsequent procedure for that? Like
But audit is already over, no?
no, from date of April till audit.
That you can do.
Whether I receive the amount.
Till date of signing you can continue, no problem. Till date of signing, no problem.
Sir, this single partners, proprietary partners,
Yes, sir.
documentation is a big issue. They don't have it.
Minimum maintain body, sir. One sheet maintain body, sir. Minimum. One sheet maintain body, sir. But don't not maintain it, that's all I'm saying.
Is extensive documentation mandatory even for tax audit cases?
I won't say extensive, what is required you have to maintain. Clause wise you have to maintain. Clause wise you have to maintain.
Here you give check private things also like apartments, something like that.
Apartment means?
Means apartment or
No, they won't come to your apartment.
No, I'm not saying that. Only the public money is, like.
Oh, association you're saying.
Right.
Mostly no.
So they check only where the public money is, like. Private.
Not public money is involved, that's it.
There's not a lot of internal audits. What are the questions? Concentrate doing internal audits.
Internal audits also. Association may not be there unless it's a very big association.
No, credit audit, banks audit, banks don't do any other functions other than sanction letters. So what documents?
Sorry.
So in bank credit audit, so you not get much of the documents for documentation. So
Why?
they don't do so.
Banks don't give you a sign. Then you should say they don't do that, sir. That's what can do.
That's a peculiar problem with the
Bank audits, yeah. Thank you very much. Thank you.